Hey guys, what's up? Welcome to my channel. Myself CA Abhishek Bansal. I'm from Mumbai and I take finals audit. So, what we are starting today? We are starting with the revision session of your CA finals audit. Okay, so all those students who have taken classes from me, either regular batch or exam oriented batch or super fast track batch. If you have attended face-to-face classes or online classes or live classes, this session will be very valuable for you. Right now, I'm just starting from beginning. I don't know how many chapters I will combine here. First, what we are recording all new chapters, which are latest ones added to our syllabus. They were not included in old syllabus. See, whether you're taking May attempt or November attempt, May attempt, November attempt, November attempt or May attempt doesn't matter. So this revision session will be very useful for you. Okay. Tell your friends, tell all your juniors, brothers, sisters, and friends. Any student who is taking the exam after you. So if they need lectures, exam-oriented lectures, super fast track or regular lectures, they can visit our website www.letslearnindia.in. You can call. Can you see the number below, which is 844-844-8919. Okay, so he can call or he can visit the website, and if anyone has any doubts, you can message me on Telegram. Its link is available in description of the video. So today we are starting with our new chapters. I hope you will enjoy this session and you remember all the things, and you will clear the exam as quickly as possible. Okay, so I have already told this who have taken classes that why is it very essential to quickly become a chartered accountant. Those who have studied from other teachers, I have a request for you. Whenever you will revise, see that the content of all teachers is mostly the same 90% plus minus, just little here and there. If you are studying from the module, if you have my book or you have your author's book, whatever you're studying, follow one teacher for one content. Always keep this in mind. Too many cooks spoil the broth. You took lentil from here, rice from someone, salt and chili from someone else. Look, it will totally become a mess. If you are following me for the revision, then only follow me. It's not like you see one chapter from me and next chapter from someone else. It will be a mess. It's been 13 years since I became a CA. 13 years means 26 attempts, right? In 13 years, 26 attempts. I have seen people's lives being made. I have also seen them being destroyed. And in last 4-5 years, since things have gone online, things have not improved but gotten worse because of too many resources available. To rely on whoever you are following, I'm not saying that you should follow me, okay? Whoever you are following, just follow anyone, okay? I always say that. Look, there can be many teachers, or basically it means a lot of teachers, but there is only one guru, right? You can see anyone, your father, mother, brother, sister, friend, all of them have only one guru. Okay, trust me. Believe me, you will definitely pass. People who are appearing for both the groups aim for a rank. Person who is giving one or both groups, or whose audit paper is pending in group 1, someone has exemption in FM, while someone has in FR. So students, keep it in mind that you need to score 70 plus, because if you get 70 marks, see students, if you will get 70 plus, then it will be good for you. If you score 70 plus marks, you guys will get exemption in this subject. So, if you score that much marks, then it will be great for your future. So every time there have been a very good result. People who have studied get very good results. People have got exemptions as well. And what else? You have to put in a little extra effort. And see, getting a rank is very important. Nowadays it is very essential. Generally, people have got very good marks. Very good marks, okay. Over the years, people have got very good results. See, like in December. Air 1 Nandini and Sachin, they are siblings. November 18, Siddhant Bhandari, Air 1. People have always gotten good results. Those who believe always know that the result will come. I work for exemption. I work for rank. I don't just want to pass. I want exemption or a rank. Whatever I explain you or tell you or the way I will teach you, just follow that. Trust me, you will see the result. Stop using Telegram. Stop using Telegram. Stop using other resources. Too many cooks spoil the soup. If you study something with focus and revise it repeatedly and ICI's material, that's it. So just stick to ICI's material, you'll definitely pass. Okay, and keep revising again and again. People will say anything. Out of 100, 85 fails. So the crowd, the crowd, they fail. It's only 15% that pass, just 15%. Because that 15% is very different, it's unique. Just think about it. The rank 1, the top 10 rankers in every attempt. They are not spending the whole day on Telegram. This doubt, that doubt, his doubt, her doubt, send them these notes, do this rubbish things. See, exams are in next 3-4 months. Many people are confused on the days near the exams that how did this solution came? How to do that? This should not happen. They'll keep fighting. If a girl asks something there, then 10 boys will start replying to her question. It's always same. I have seen students like this. Since when Telegram started, around a couple of years ago, they're still on Telegram with WRO, SRO, CRO and NRO number. You won't become a CA like this. You're wasting your time. Your age is increasing. You are wasting your money. Keep this in mind. Okay? Choice is yours. Okay, let's start. Take the name of the God, whoever you believe in, remember him. Either you have faith in Allah, or in Vaheguru, or in Jesus, or in any God or Goddess. Okay, so remember whoever God you believe in. Let's start now. Are we ready to rock? First, I'm starting with a new topic, which is SRS, Standards on Related Services. I am teaching from my handwritten notes. People who have taken my lectures will have these notes. Those who don't have it can take it from Telegram. Okay. You can take it from our website letslearnindia.in. Recently, there were some issues going on with the website. It was hacked. If it is not working properly, then call the office at 844-844-8919. The team will send you the notes over WhatsApp. Otherwise, they are on Telegram. It's dictated handwritten notes from the class. These notes are from my class only. It's written very neatly by one of our student, Vinay. Right. And Vinay will definitely become a CA in this term. Okay. Vinay was my student in Inter, and he is now studying final with me. Okay, let's start. Standards on Related Services, SRS 4400 and SRS 4410. What does SRS 4400 say? Okay, disclaimer number 1. Please silence your Instagram and Telegram, etc. Just watch the lectures. And listen to this repeatedly. I will not say anything in between, no time pass, no conversation. It's like a marathon. This will help you recall things during the exam. These are revision sessions. Actual classes are different. You have to buy videos for actual classes from the website. This is just revision. I'm assuming that you have studied at least once. 4400 refers to AUP, agreed upon procedures regarding financial information. 4410 is compilation engagement standards. Standards on Related Service. You're not auditor. The audit is complete. You have COP. You are a CA plus COP. So you are sitting with your form. Imagine you are the auditor of Reliance Industries. I have become an auditor. I have given the audit report. Now a requirement comes to Reliance. One requirement came to them that you do one work. Get us prepared the financial statements. Imagine. SEBI has a requirement. Some insurance company has a requirement. Some creditor has a requirement. Now we have to prepare the FS in particular format. Like in SEBI, it's said to follow LOD or listing obligation disclosure requirement. IRDI had said that follow these norms. Okay, the creditors say do it on the cash basis and give it to us. So the Reliance Industries comes to you and you are a CA plus COP. Means you are a CA firm. They came to you. They said, let's do one thing. Give me an engagement. Meaning make an FS for me. They came to you. Who are you? One pure CA plus COP. What do you have to do? You have to make an FS. What Reliance has told you? You're not auditor. I am auditor. So students, who are you? You are a practitioner. And what do we call it? We call it related services. To an assurance engagement means practitioner. Word used here is practitioner means CA plus COP. Gives an opinion about the specific information due to which the users of the information, like I told you earlier, SEBI is users. IRDI and creditors are users, are able to make confident decisions. Not all the engagements performed by practitioners are assurance engagements. Okay, what are the related ones? Firstly, like preparation of tax returns where no conclusion conveying assurance is expressed. You are making income tax return. When we do tax work, we make P&L and balance sheet, right? So generally, what is it said? CA plus COP means if you are an auditor or stat auditor, you can do that or tax work. But generally, what does large companies do? They keep separate stat and tax auditor. So you got a tax audit. Consulting or advising engagements, such as management and tax consulting, means giving consultancy. These are related services or engagements covered for related services such as AUPs or compilation of financial or other financial information. Sir, so this is my definition of what are related services. It's new attempt, new syllabus, anything can come. Now let's come to what are AUPs. What are AUPs? Sir, in engagement to perform AUP as the auditor, when I use the word auditor, what will we say here? It is not a stat auditor. If another CA or COP is engaged by the client to issue a report on factual findings. Based on what? Specific procedures performed, specific subject matter, specific elements, accounts or items of FS. Like I told you, creditor said, do me a favor, prepare this on cash basis. Okay? Specific subject matter. Specific elements mean that do one thing You can make it for the stock data, means you can make it for the investment side and for the current asset side as well. So this will be AUP, meaning you only have to do that much work. For example, engagement to perform procedures on accounts payable like creditors payable. Accounts receivable, debtors pay or purchases from related parties do that much. The person performing the related service need not be, it's very important, need not be necessarily auditor of entities FS. Now I'm starting the first one. Always remember that there will be two exceptions. Among new standards that we have, two exceptions are there. Okay, you will always say that in all the new standards that came, any CA plus COP can work except two standards. I will tell you when those two standards will come, there must be a stat auditor. Rest everywhere, if any standard comes, any CA plus COP can do that. Okay. The difference between audit versus AUP can come in the exam in MCQ. An audit expresses opinion and provides assurance to users. What would you say? An auditor expresses the opinion because my objective is mainly that and provides assurance to the users. Sir, what happens in the AUP? Only a report of the factual findings of AUP is provided. See, I told you transactions happened with related party. These transactions happened. Creditors look like this, you purchased on this day, payment wasn't made. This much inventory arrived on that day, I told you. Okay. Instead, the users draw their own conclusion. Their own conclusions based on the factual findings stated in the report. Like stock audit. Now what happens in stock audit? We go and do stock verification that these are units. Books are saying this much. He gave it to the bank. Now the bank has to give loan or not, it's bank's decision. So bank will become user. We become practitioners, we provided the audited stock, so that became AUP, agreed upon procedures. For example, look, names of the major suppliers and amounts outstanding as on the date which amounts in trial balance. Obtaining supplier's confirmation to confirm outstanding balance on date, we prepared AUP report. Decision made on that will be taken by the user himself. So 3 questions at the beginning were direct questions. Yes, they can frame a story around it and then they can ask that the management wants to know or the CEO wants to know what are AUPs. Article assistant wants to know difference between audit versus AUP. So it won't come directly, but in the end you'll get a hint. Remember, 3/4 of the questions is rubbish and irrelevant. Question number 4. What's the matter? Look, I'll tell you, there are 3 patterns that form. I have fully observed and read, there are 3 patterns. Among all new challenges, one is before engagement. One is during engagement, one is post engagement. Means before accepting engagement, what conditions to check. You'll get such question everywhere. During means the procedure and post means reporting. Reporting is a common answer. Look, what are the matters to be agreed? Included in the engagement, that's before. So my code is penal. This is common. Different places have different codes. But if you get confused in the exams, then what will happen? First, understand the purpose. See, following are the matters. First, stated purpose for the engagement. Identification of the financial information. Wait. The task to prepare FS, to prepare the data, that will be done by the management. I will only be preparing the report. Okay. Identification of the financial information to which the AUP are applied. NT of the specific procedure to be applied. What will you say? NT of the specific procedure to be applied. Nature of the engagement, including the fact that what needs to be done and how. And I'll explain it very clearly. It's not an audit, it's not a review. And therefore no assurance will be expressed. First make it clear. Then we don't need queries. Whom will you give limitation? We always give the stat audit report to the members. There are many users. Who will you give it to? To bank, to IRD, AI, to SEBI. First make it clear. So there are 5 things. First, what is the purpose? We call it the identification of the FRF. Then nature, timing and extent of the procedures and limitations. These 4 points are common. I made different codes in different answers, but these 4 points are common. Purpose, identification of FRF, nature, timing, extent of procedures and limitations on the use, limitation on the distribution of the report of factual findings. What else is added to this? Nature of the engagement. My job is neither to give opinion nor to audit. I will not provide any assurance. This is about during. Then, next question is, what are the contents of the report? It has a very common answer. Now, if any new standard will be created, it will come either once. Take any standard, we have just started, 4400. He says, what will be the contents of the report? So I create a common term, TUDUPS. What's the common thing? T for title, A for addressee, D for date, P for place, S for signature. So what are all these? Title, addressee, date, place, signature. So there will be 5 points. Don't write with comma. Write title, addressee, date, place, signature in pointers. FRN and UDIN. Title, addressee, date, place, signature, FRN and UDIN. That's 7 points. Now, when you go into the middle of something, do you know what you have to do? So use the one which we used in the case of before. What is it? So I will tell you very clearly all the 3 points. What are these 3 points? Identifying and preparing FRF is management's duty. It's their duty to prepare FS and identify FRF. Second, what is our task? Our task is to give report on this. Third, this engagement is done under that SRS standard. This engagement is done through this particular essay, whatever standard is there, either SRS or SRE. These 3 points are common. See, if you study from the modules, so the answers are very long, very long. So it's your call. See, in the exam, it will be a question of 4-6 marks. It's better to write logical things than to sit there like a fool. So title addressee, identification of financial and non-financial information to which the AUP have been applied. A statement that the engagement was performed as per so and so standard SRS 4400. Identification of the purpose limitations is used. Then list of the procedures performed. A statement that the procedures performed do not constitute audit or review and as such no assurance is expressed. A statement that the report is restricted to those parties who have agreed their date, place, auditor, signature. Place of signature FRN, you didn't check it. So what did they do? They just reversed the pinel, finished. Over. The whole standard is done. Wow, we completed it really quickly. Sir, my old teacher took complete 4 hours to explain this topic, but you did it very fast. They shown us the reality that such things happens, all that doesn't come in the exam. Content of module comes in the exam. You will enjoy it. Did you see the report, how people did this? If you will write rubbish in exam, it's worthless. This standard have 5 questions. It's very small standard. First, what are related services? Second, what are AUPs? Third, what are the contents of the difference between audit versus AUP, and what are the matters to be agreed, including in the engagement letter. Then what are the contents of the report? Okay. Clear. All right. Let me tell you, I have done the MCQs of all the chapters on YouTube. MCQs of all the chapters given after module, integrated MCQs I had done live on YouTube. So if anyone wants to see them, they'll be in the May 2024 playlist. You can go and see it on the YouTube. Okay. Let's move on to the next topic. Now we will discuss SRS 4410. SRS 4410, is this a compilation engagement? What is the meaning of compilation engagement? Now look, I am Reliance's auditor. Let's carry forward the same example, okay? They will give me the prepared FS. Preparing the FS is their job, but they are from home science. Means they have done a course which includes cooking, washing clothes, cleaning utensils. They don't know how to prepare FS. So we'll hire a CFM. Sir, you should prepare FS for me. You won't ask me to prepare the FS, will you? How can I do that? I'm an auditor, right? Prohibited services. We will call other CA firm, meaning CA plus COB. So they will prepare FS for you. So the CA firm that came to you will be preparing you the FS as per AFRF. Or maybe the AS wasn't applicable there, but now Ind AS is applicable. So from AS to Ind AS. Or one more example. They have holding subsidiary, you have to consolidate. They have to consolidate. You were told them to consolidate. What kind of engagement did you receive? It would be compilation engagement. What is it? Compilation engagement. What is it? So it is an engagement. It is an engagement in which the practitioner applies accounting and financial expertise to assist the management in preparation and presentation of the financial information of an entity as per the applicable financial reporting framework and issue a report. So what will you do? You will prepare an FS as per the FRF and will issue a report. Who can take it? Any practitioner, any CA plus COP. It cannot be stat auditor. It's logical. You will be covered in prohibited service. Not possible. Again, you're not giving any opinion. It is not an assurance engagement. It does not require. You will check the data? No. You gave me the data, the trial balance, the total. Based on that, I will arrange your audit. Okay? Whether it's right or wrong, I won't do anything. After that, I won't do anything. Neither will I give any conclusion. Nothing. He will prepare it. Like, what do we do? Like, this is a designer. Okay, so what did you do? You brought the raw material. You used it to make finished goods. And it's done. If it's right or wrong, it's your accountability. It is not required for the practitioner to verify the accuracy and completeness of the information provided by the management, or to gather the evidence, or to express an audit opinion, or to review conclusion on preparation of financial information. No checking is needed. No need to gather evidence. No conclusion to be given by us. All right. So this is what compilation engagement is. Its definition. Okay, now, what is its use? So this is the question from module. It may be used for the following purposes. It can be an MCQ. First, to comply with mandatory periodic financial reporting requirements as per law and regulation. According to Schedule 3, you need to prepare FS, prepare accounts as per Ind AS, have to do consolidation. Or, it's my wish, means management's will. For the purpose unrelated to mandatory financial formation means, no mandatory purpose what? For management or TCWG internal use. AS was applicable to management. Management says, let's do one thing and see how it looks according to Ind AS. So asked any CA firm, gave them 2 lakhs and told them to make as per Ind AS. Or for periodic financial reporting. Like there's periodic, like when you take loan from bank, you have to prepare your accounts quarterly. We usually prepare it for the whole year later. We have to make for 3 months. So give it to CA firm. Or for transactional purposes like mergers and acquisitions. Okay, for the mergers, the investor will be needing this. So we prepared it for them only. What is mandatory purpose mentioned in law? What is non-mandatory purpose management and TCWG internal use? And periodic financial reporting like a bank. Third, for transactional purposes means mergers and acquisitions. Clear? Then, now let's see this. Does a practitioner needs to comply with ethical requirements? The answer is yes. Do you agree? Although you are independent and if management gives you some work, then you should think whether that work will come in between your ethics or not. You should always follow and have some principle, ethics or ideals. I hope it's clear. Okay, now let's take an example for this. I cannot do audit of my father or my brother's company. Can I? But can I develop accounts? It can be made. There is no problem. But you have to be a little independent. It is not mandatory, but you have to be a little independent. Okay? The practitioner shall comply with relevant ethical requirements in Code of Ethics. Moreover, he should also properly identify and address the threats of relevant ethical requirements. Such as, I have my own CA firm, I cannot do it, I cannot create an account, but my partner can do it. No problem. But you cannot do the audit because it's not allowed. Right? Being non-assurance engagement as assurance is not their independence. Requirements don't apply to compulsion, but certain laws, regulations may specify requirements regarding independence. So, safely, the conclusion is that you should be independent. If there is a threat and you feel any threat, use safeguard in place. For example, you cannot audit your father's company, but you can make accounts for it. Okay? You know that it's not prohibited by law. But if something is wrong with its accounts, you won't report it. Or you can ask your partner. Say to your partner. And that's threat, the elimination of the elimination of threat. Okay? First question, there are 3 questions. Before, during, after. Okay. 4th question. What are the contents of an engagement letter? The code is LORI. We made the LORI here. Purpose will be the same. Identification of FRF nature, time and extent. Then the nature of the engagement and limited use. Let's check which are the same. Limited use. Then objective, scope, and what is management's responsibility? Responsibility of management. Responsibility of practitioner. What are the uses of being CA? And anyone can do CA. What is management's responsibility? Important question. Preparation and presentation of financial information as per applicable FRF. Next, you will create internal control, design, implementation, maintenance. You will see accuracy, completeness of records, documents, explanation. You will also see if the documentation is proper. Judgment is needed in preparation and presentation of financial information. This is your job. It's common. Do you know what I am saying? It's your job to make FRF and prepare FS according to the FRF. It's your job to make controls, ensure completeness of record, judge and maintain accuracy. Then identification of AFRF, expected form and content of report. So the code here is LORI. Limited use, objective, responsibility of management, practitioner, identification of AFRF, expected form, content of report. Is this clear? Okay. 5th. It says, how as a practitioner will you perform compilation engagement? And guys, write the whole procedure. Just like you all wrote in BCom. Practitioner shall obtain understanding of entity's accounting system and applicable FRF. Try to understand. Then it says, he shall compile financial information using documents, records, explanations, and other information provided by management. He shall discuss with the management or TCWG about the significant judgments made by management. But before completing the engagement, you need to understand entity, business, and operations. Now, proceeding further, there is a separate question on this. If during compilation engagement, if I see some information, my job is just to prepare and give it. But if you can see that something is wrong, you can't stay silent. Although it's not your job to check. This is clear. If you become aware of incomplete information, means it did not come at all. Or information is inaccurate, it came but it was wrong. He should bring to management's attention, request additional information as it's incomplete, need additional information. If it is inaccurate, it will have to be corrected. If there is a mistake, get it corrected. If not, request for it. Management is stubborn. It's very stubborn. If practitioner is unable to complete the engagement because management has not provided records, explanations, documents, it has failed to give these, then what will you do? Withdraw from engagement. Inform management reason for withdrawal. That it's not you, it's me. You will find someone better. You must have heard this somewhere, especially boys, right? It is not working out. And just leave it. If during course of compilation engagement, practitioner becomes aware that if the compiled financial information does not describe the applicable FRF, or they are not making the changes that were requested, they are not doing it, or if the financial information is misleading, then what should we do? The practitioner shall propose amendments to the management. The proposed amendments are the changes. If management agrees, good. If they don't, withdraw and inform management its extension from above. The compiled information does not describe applicable FRF or amendments to the compiled information that are required. Or if the compiled information is misleading, tell them to please fix it. If they fixed it, then good. Otherwise, withdraw and inform the management and TCWG. Then, if withdrawal is not possible, like it is prohibited by law, issue determine any parallel. You know this. Professional regulatory legal responsibilities. Practitioner should determine professional legal responsibility applicable in circumstances. Then, he should take acknowledgement from management or TCWG as appropriate. They have taken responsibility of the final version of compiled information. If they have rectified it, then that's good, and you can ask for a written acknowledgement from them that it has been rectified. Okay? I know this answer is lengthy. I give you 2 minutes. Read it once on the screen now. Those who have notes, read from it. Those who don't, I am scrolling here. Read slowly. I am turning off the video. You read it. Now, next answer is contents of the report. The common answer is title, addressee, statement, date, place, sign, AFRF, and in the middle, what will you write? Management is responsible for the identification and preparation of the financial reporting framework as per the applicable FRF for compilation engagement. Responsibility of the practitioner to compile information and prepare a report. Statement that the engagement has been prepared as per SRS 4410 and now the 3 points are common. Check it. Title, addressee. Statement, practitioner has compiled information. Description of the management responsible. You have written the identification of the AFRF description. The company engagement has been done as per 4410. Okay. Now, look what is written here. Date, place, sign, date, place, sign. Correct? If you want to write and remember this explanation, it's fine, as I have already told you the commons. Okay? Explanation that a compilation engagement is not an assurance engagement, that practitioner is not required to verify the accuracy or completeness of information provided. We studied this. He does not express an audit opinion or review conclusion. Then, if financial information is prepared using special purpose framework. So, what would you say there? Describe the purpose and draw the attention of the users. Describe the purpose and draw the attention of the users. They have added these two. There are 3-4 more points, but I have made them common. Exam will have 4 to 6 marks question. You need to explain this in exam. Title, addressee, date, place, sign, AFRF, that's done. There are 3 common points between them, right? Therefore, if you want to write, you can write, but I don't know which one will come. Look, 2 are here. Then 1 is in the review, another in SQC. Then it's also in SAE. Hence, in different channels, the answer is common. Title, contents of the report will come, but we don't know which one. I have told you method. Then, what documentation? This is a common answer. You will find it everywhere. Just memorize it, okay? Now here, it's given in easy language. What documentation is required? As per take any standard. First, significant matters arising during any engagement. If review comes, then review. If quality control, then take that. If assurance, then that. And compilation. How those matters were addressed by practitioners. Significant matters arising during compilation engagement and how those were addressed by practitioners. Record of how compiled information reconciled with underlying records, documents, explanations, other information provided by management. Third, a copy of the final version of the compiled financial information for which management, TCWZ acknowledge responsibility practitioners report. First, significant matters arising during compilation engagement. How those were addressed. Record of how compiled information reconciles with underlying records, documents, and explanations. Then final version of the compiled information. What other documents to include? Trial balance, summary of significant accounting records, other information. There is an MCQ. Sir, SQC1 is applicable for compilation engagements. Guys, keep in mind that SQC1 is applicable for everything. SQC1 is above all this. For SA, then SAE, standard on assurance engagement we just studied, standards on related services, and standards on review engagement. If it comes in MCQs, in interpretation part of MCQ, management says SQC is not applicable. Is it applicable to 220? No, 220 is applicable for audit. Quality control standard 220 is only applicable for audit. SQC1 is applicable to everyone. 220 is only applicable for audit. SQC1 is applicable to everyone. It includes everything. Clear? Okay. We have finished it. Yes, that's it. Turn the module, you will know. See 4 questions behind module. We have to solve it immediately. 2 or 3 questions have to be solved. What will you do? Pause the video. First, solve those questions and answers. You will find all the questions here. So look for it. Try solving it orally, each and every question. It is necessary to practice the questions and solve modules. And nothing outside the module will be part of the exam. Okay? You have to do module, pause the video and complete the module. Furthermore, don't do the MCQs now. We will do all the MCQs together. I have uploaded the MCQs topic-wise on YouTube. How was it? How did it feel? Good chapter? Guys, like, comment and share the video with your friends. Make sure the video reaches maximum people. Do comment about how was it. And if you pass, then comment on it. People living in Mumbai and those coming from far, please visit our office in Mumbai and meet me. And if I am coming to your city, then do recognize me as I won't be able to find you. And I want everybody who is watching me right now to clear the exam. Because this time, we will pass the exam. I know we will. Okay, all right? On the other hand, let's move forward and we are going to do our specialized areas. Therefore, next chapter we will study specialized areas. I hope I told you to solve previous questions. Please solve them at the back of the module. To test your knowledge and also to test your understanding. Let's move on to specialized areas. 800 series in specialized area also existed in our time. When I started teaching this, it was there until 2015, then was changed in 2015. Syllabus was revised. So whatever I am teaching you right now, clear? Sorry. All this happened in our time and I taught these things too. Syllabus changed, everything was removed and they brought it back. It is karma. It's all in new syllabus. And they call it new syllabus, but it's not new, it's revised. 800, 805 and 810, we saw audit report in series 700. After that 3 comes 800, 805, 810. 800, 805, 810. What it says? First essay 800. And what does it say? This essay 800, it talks about the special consideration, that is the audit of the FS. Of what FS? The audit of FS prepared as per special purpose framework. The audit report we make is based on the general purpose framework, which is the applicable FRF, okay? And here what is done? Management has made FS. And we were told that you have to audit it, but the FS that are prepared according to a special purpose framework. You remember when we studied compilation engagement and the AUP? For example, you told your CA firm to prepare it and they prepared it for you and you submitted it. And now you need to audit it. And is this audit part of the auditor? So who can do it? Anyone can do it. A CA plus COP can do it. Okay? Any CA plus COP. Then, what is a special purpose framework? Define it along with an example. Essay 800. Define the special purpose framework as per applicable FRF design. To meet the financial information needs of a specific user. Just like the bank said you should do one thing. You should give us a fully prepared FS. Bank asked to prepare a complete FS on what basis? On a cash basis. On cash basis. Okay? Then FRF may be a fair presentation framework or a compliance framework. Examples of special purpose. Preparing the accounts on cash basis for creditors has come. FS prepared as per regulator. I explained example of SEBI as per LODR. FS prepared as per a contract such as a bond, indenture loan agreement or a project rent. The questions which we have seen behind the model contract is used again and again. If FS is prepared as per contract, it is a special purpose framework. The FS is prepared as per contract as a special purpose framework. Okay. First question. What are the conditions when accepting such engagement? Meaning it is about before. These are considerations. So first, what do we need to check? Applicability of FRF. And now the framework would be presumed acceptable generally. Applicability of FRF. And this FRF now is special in all and we all know it. But it should be recognized somewhere like format of SEBI's LODR. It's on cash basis, but they say follow anything else and give it to me. If you are following something different, it should be acceptable. Framework would be presumed acceptable if the organization follows established and transparent process considering the views of the relevant shareholders or the relevant stakeholders. Relevant stakeholders should be considered while taking into account what is happening in the market. Next, the general purpose is in Schedule 3, AS and AS. Even if not that, then do something else. It should also be recognized, meaning people should be aware of it. Then SA 210 requires the auditor to determine conflicts between financial reporting standards and additional requirements that exist, and prescribes action to be taken by auditor if such conflict exists. Likewise, when we agree during the engagement time that you will give me all the exercises and additional information, and if he refuses, you should take proper action. It means you will not accept the engagement. Two terms are agreeing to it. If you have accepted the engagement and then there is any issue, you withdraw. If there is a problem before accepting the engagement, then you would not even accept it or you can withdraw it. Whether the framework is acceptable or not, I will listen to my heart. It shall be a matter of professional judgment. Professional judgment of the auditor. Then, what are the considerations when planning and performing such an audit? Give all the references of essays. Essay 200 requires the auditor to comply with all relevant ethical requirements and all relevant standards on the audit. Follow it. It requires auditor to comply with requirements of each and every standard. Unless essay is not relevant. Like 210 is there, 230 documentation, 500 evidence is there. See, you are conducting audit, so follow all audit standards. Only framework is different. We have studied about general purpose framework between 200 to 700. This is special purpose framework, but this is also audit to meet all requirements. Sometimes what will happen, he has to depart from relevant standard. In that case, by performing alternative audit procedures, AUP are the audit procedures, he needs to comply with SA 320. That is judgment about the matter that is material, such as 320 and 200. In case of special purpose framework, it's important as questions comes on this. Such as, FS are prepared according to contract. Okay, so now when we decide about the materiality, management says, look, as it is about the loan contract, the loan amount is 1 crore rupees. So check the data which is around 1 crore. Don't check the data below it. Management had said 1 crore, but auditor shouldn't listen to them. So auditor here could be any practitioner. Okay, now this auditor should calculate materiality on his own according to P&L. Also calculate according to balance sheet, individual items, and according to FS whole, calculate according to yourself and not management. So management agrees with the intended users that on a threshold below, misstatement identified audit will not be corrected or otherwise adjusted. So anything below 50 lakhs, we will just be ignoring it. The existence of such a threshold does not relieve the auditor from requirement to determine materiality. As per SA 320, it's your job to check. For the purpose of planning and performing an audit, comply with 260. What is 260? Communication with TCWG. So when a complete set of general purpose FS is prepared by the entity, the person responsible may not know. There's a separate team for a general purpose FS. Special purpose FS is formed, so management TCWG will be different. So talk to them. Now when a complete set of general purpose FS is prepared by entity, person responsible for preparation of special purpose. So it may or may not be the same. Okay, may or may not. Ask them who is responsible for overseeing preparation of general purpose FS. It will be different, so talk to them. So follow 260. If it's about opinion, what should you do? You should follow SA 700. What to follow? SA 700. So you have the reference of 200 and 210. 320 reference is there and reference 260, reference of 700 and more. I use 4-5 more points and formed an answer. 1.5 pages easily goes for 4-5 mark answer. Okay? Read questions 2 and 3 again. Question 3rd is important because from that a question might come. It is about threshold, right? So read. Hi guys, so the video stopped because of some technical reason. And so now I'm recording on the next day. Let's continue. We have studied till question number 3, I think, so let's continue question number 4. And it says, how will you prepare a report? How will you prepare a report? For an engagement as per special purpose framework for reporting. So for reporting, we generally follow SS 700, so we prepare the report according to SS 700. This report should describe same point like purpose. Management will be creating framework and will be responsible for its use. We will call out and ask what is our work, so basically all those same things. We should prepare the report according to SS 700. Report should describe the purpose for FS formation and intended users, that limited use point. Report should contain management has choice of reporting. Then, the explanation of the management's responsibilities. To avoid misunderstanding, the auditor should alert the users that this report is prepared as per special purpose framework and may not be suitable for any other purpose. Then, the auditor may consider it to indicate that the audit report is actually intended solely for specific users. This can also be achieved by restricting the distribution or use of auditor's report where clear indications of restriction are there on distribution and use of auditor's report. Now for this, the para may be expanded to include matter and heading to be modified accordingly. They can write like restriction on the distribution and use of the audit report as per special purpose framework. Question in model is, how will you stop it? So heading will be restrictions on distribution and use of the report prepared as special purpose framework. So line you will write, without modifying our opinion, we draw attention to note number 10. Note number A or B, whatever you want to write describing basis of accounting. The FS are prepared to assist company to comply with the financial reporting provisions of the contracts. So the example I took was based on the contract. And as a result, the financial statements may not be suitable for any other purpose. This report is solely for ABC company and should not be used by anyone other than the ABC company. So this is an example. Because it was given in model, so I wrote this example here. When it comes to reporting, they might ask in the report, how would you restrict the distribution or use of the report? Explain with the help of an example. Clear? Okay. Please read question number 4. Start reading 4. Done. Okay, now let's move on to SA 805. 800 is special purpose framework. Now 805 states that special consideration again. So this is our audit of single FS. It means audit of only balance sheet, audit of only cash flow, or audit of only profit and loss. Or else a specific AIE, which we call I. Specific I. Accounts, items and elements. Specific accounts, items and elements. For example, the stock audit, debtors audit and creditors audit. Okay. Now if a single FS or specific AIE is prepared according to a general purpose or special purpose, means it can be based on general purpose or the special purpose also. If you follow the special purpose, then SA 800 will also be applied. Okay. So 805 does not apply to the reports of components or branch subsidiaries. It always applies to the main company. Now, what is a single FS? A single FS should be distinguished from a complete set of FS, like cash flow statement, from single FS balance sheet and cash flow audits done. So what is an element? It could be debtors, cash and bank, stock or inventory. So if my creditor got audited or my loan got audited or say my investment, so it's same thing. Consideration when accepting wide engagement. Refer SA 800 question 2 on consideration. Same point you will do. Now, so here the thing is, it's not that you are auditing the entire FS, just a single FS or specific AIE. So now let's say you might not be having the knowledge of that. So it says that compliance with requirements of SS requires audit a single FS or specific AIE. This may not be practicable when the auditor is not auditing the entity's complete set of FS. With complete set, you have more knowledge. If you audit whole, I'm only auditing specific AIE or a single FS. Now he may not have the understanding which that auditor might have. The person conducting the full audit may not have the same understanding of the entity, its environment, and its internal control system. He may also lack evidence about general quality of accounting because other accounting information would be needed in auditing a complete set of FS. Okay, but the auditor may need further evidence to corroborate, means to support the evidence obtained from accounting records. So point number 2 is compliance with the requirements of other SAs, because you still have to comply in case of an audit of a specific element of FS or specific AIE. Now certain SAs require audit work which may be disproportionate to what? Disproportionate to the element being audited. If the auditor feels that, sir, I was doing this one balance sheet audit. I am auditing balance sheet but feels like the whole is being audited. I was doing data creditor but feels like whole is being audited. So the auditor concludes that an audit of A, single FS or specific AIE, in accordance with SAs may not be practicable. He may discuss this with the management. 2. Audit by the another type of engagement might be more practical. I might be auditing single FS or specific AIE, but in this I have to do the entire work. This should be discussed with management. Regarding another type of engagement may be more practicable. Okay. So this was before the engagement. Now comes your planning. During. Now first we need to fulfill requirements of all SAs. Auditor shall adapt all SAs relevant to audit as necessary in circumstances of engagement. Number 2, if you are auditing a single FS or specific AIE in conjunction with the audit of complete FS, and the auditor may be able to use evidence which he took during the entire audit. Now if it was told you to audit that, let's say, so whatever evidence you had undertaken and you had understood during entire FS, that you can use here as well. He may be able to use evidence obtained as part of the audit of entity's complete set of FS in audit of FS of that specific element. He should plan and perform the audit of the FS or element to obtain SI. He may need to perform other audit procedures for interrelated items. For example, I was told, please relate creditor. A creditor will always be linked to purchases. So even that I have to review. They say to record debt and debtor will be linked to sales. We will see bad debts as well there. So bad debts and sales, both interrelated items, should be considered. Then, materiality is determined for a single FS or a specific AIE. A specific element of FS or maybe lower than materiality for the entire set of FS. This will be affecting the NTE of the audit process and the evaluation of the incorrect MST, because you see the materiality level for the main FS, it's going to be different. Single FS specific AIE is a part of it, so its materiality level will be lower. So accordingly, your procedures will also change. So these basically are procedures of during. Okay. So please read questions number 1, 2, 3 and 4 from the notes. After 1, 2, 3, 4, we now move on to reporting. Read 1, 2, 3, 4 from the notes. Done? What's there in question 5? Here, how would you form an opinion while using SA 805? What does it say? How will you form an opinion as per SA 805? This is something important. If complete set of FS contains unqualified opinion, meaning unclean opinion, whether in accordance with fair presentation or compliance framework. So, what word would an auditor use when focusing on a single FS or specific AIE? FS present fairly in all material respects as per the applicable financial reporting framework, or FS gives true and fair view as per AFRF. We can use the words fairly as well as true and fair for fair presentation. In compliance framework, when you are following a law or SEBI requirements, there is framework compliance. What would you say? FS are prepared in all material respects as per AFRF. We don't use true and fair view in that context. While using Schedule 3 and AS or AS, use true and fair. That's how we write it. Okay? Look here. What factors affect auditors' consideration to use the phrase true and fair view? We discussed while giving clean opinion to talk about true and fair view. Now, when will the true and fair view be affected? When the prepared accounts are prepared incorrectly. Okay? Whether AFRS is explicitly or implicitly restricted to the preparation of a complete set of FS. So if we are given the statement that there is a restriction to use, AFRF is explicitly or implicitly restricted to the preparation of a complete set of FS, right? So if AFRF has said no, then it can't be done. Number 2, whether single FS or specific element of FS will comply fully with each of those requirements of the framework relevant to the particular FS or the particular element. What to do? Use true and fair view. If it's not using it, then we won't do it too. Number 2, if necessary to achieve fair presentation, the disclosures provide. Those specifically required by framework or in exceptional circumstances, there's departure from framework. Compliant framework's requirement is not followed. In case of inability to meet requirement, it is departure. True and fair view can't be used. So true and fair view cannot be used. If it is being complied, then only we can use true and fair view. In case of departure, we cannot use true and fair view. Questions 5 and 6 were quite theoretical. You might not get question on this as it lacked provision, and only asked about circumstance when true and fair view is not used. Because since the new attempt in the recent few years, there have been more questions asked on the conceptual things in the exams. Then question number 7 is about framing an opinion. If an auditor undertakes an engagement to report on single FS or specific AIE, along with the engagement to audit the entity's complete set of FS, it means you are only person doing the complete setup and single FS or specific AIE has been done. There will be 2 separate reports because of 2 engagements. One is complete and one is single. Single also includes the specific. 2 separate reports means separate opinion. There will be separate opinions. Now, look here, single FS or specific AIE may be published together with the entity's complete set of FS. Okay? If complete set of FS has been published, meaning they included the stock report in the main report, or in the main FS, they put everything related to the audit of the balance sheet in there. Okay? If auditor concludes that presentation of single FS or specific AIE doesn't differentiate it sufficiently from complete setup of FS, then he may request the management to rectify the situation. When you are given different opinions, then you are supposed to separate FS too. Here, the auditor should also differentiate the opinions. So he has to give you different opinions on complete set of FS. Auditor should also differentiate opinion on single FS or specific AIE from opinion on complete set of FS. What comes next? Auditor should not issue any audit report until he is satisfied with the differentiation. I repeat, until he is satisfied with the differentiation. Okay? It's simple. When I give you separate reports, then you will also provide separate FS for them. I will give separate opinion. But remember, as an auditor, I will not issue any report until you separate the FS. It means that the auditor shall not issue any audit report until he is satisfied with the differentiation. Until he is satisfied with the differentiation. Clear? Very important. If the audit report on the complete set of FS is modified, what does it mean? Main report is qualified adverse and disclaimer. EOM and OM, meaning all is there qualified adverse disclaimer, EOM and OM. Then the auditor shall determine the effect on the single FS and specific AIE. I used short in reference to this essay. It refers to single FS or specific AIE. And when deemed appropriate, he may modify the opinion or include EOM or OM. Now, what is the bigger one? Big means complete set. Qualified adverse or disclaimer or EOM OM. With the smaller one, If you think it needs to be modified, modify it. If you think it needs EOM, do it. If you think it needs OM, add it. Point number 3 said that if you think, do it. Fourth, okay, if complete set of FS contains adverse opinion or disclaimer, oh Lord, there is adverse or disclaimer opinion. Adverse disclaimer are big ones. It is a big problem. Then the single FS. It means balance sheet, P&L, cash flow notes, and SOKI. Cannot be unmodified. What does it mean? It cannot be cleaned. Adverse and disclaimer were the big ones. Small ones meaning single FS cannot be cleaned. It can't be cleaned. This is because such unmodified opinion would contradict the adverse or disclaimer opinion on the entity's complete set of FS. What did we see? Single FS cannot be unmodified. Okay, only single FS. Not AIE, it will come later. So, if entity's complete set of FS contains adverse or disclaimer, it's same point. And the auditor wishes to give what? Generally, we discussed that you cannot give a clean opinion on single FS, but you can give it on specific AIE. Okay, you can give it on specific AIE, not on single FS. Consider the stock audit. It is stock audit. Whether it's debtors audit or creditors audit, you can give it on them. But 3 conditions need to be met. The auditor is not prohibited by law or regulation from doing so. Okay, law doesn't prohibit him. Opinion expressed in an audit report is not published together with the main report. The main report should be separate. This report should not be included with it. Specific element doesn't constitute a major portion of entity's complete set of FS. That is not a major portion of complete set. Firstly, it's not prohibited by law. Second, reports not included. Therefore, it wouldn't constitute a major portion of complete set of FS. Is that clear to all of you? Firstly, it is not prohibited by law or regulation. And the opinion is given separately. It is not published together and doesn't constitute a major portion of the entity's complete set of FS. All 3 are must. Condition 1, 2, 3 will be asked in the exam. Listen now. If there is adverse or disclaimer opinion in big report, then single FS cannot be cleaned. Big report meaning the complete set contains adverse or disclaimer, and it indicates a big problem. If you want to give a clean opinion on specific AIE, there is no objection, but meet 3 conditions. First, it is not prohibited. Second, it's not published together. Third, it doesn't constitute major portion. So 3 nots. Not prohibited or published together does not constitute a major portion. SA 800 and 805 do not override the requirements of other SA. It has to be done, nor do they purport to deal with all special considerations. Do them all. It's audit 2. Just a different kind of audit. 700 concludes FS complete sets audit. It was in 800 for special purpose. What is in 805? It talks about single FS and specific AIE. Understood? It's very easy. Cool. Next. There's another point. We'll do that later. First, revise this much. This question about framing an opinion is very important. It's likely to appear in a 2-mark MCQ or perhaps a 4-mark question. Revise it well. Done? Now, the last part, which says, if the auditor's report on complete FS is about what? It is disclaimer of complete set of opinions. Alright? Regarding what? The results of operations and cash flow. Balance sheets unmentioned, including state of affairs. Then still the auditor can express unmodified, meaning a clean opinion regarding the balance sheet or state of affairs, because a disclaimer of opinion was expressed only where it concerned operations and cash flow, and that with respect to the FS as a whole. It wasn't in the balance sheet. So clean opinion can be given on the balance sheet. This is an exception. Here are some examples of specific AIE which will be helpful in doing MCQs. We did accounts receivable allowance for doubtful debts. The inventory schedule of externally managed assets has been done tangible assets, including notes disbursement in relation to a lease property, including explanatory notes also. All of these are examples of what? Specific AIE. Okay? And students, all of this comes under SA 805. Now, so anyone can do 800, they can do 805. In CA Plus it can be done, but an outsider can do chart audit. 810. It's very much different. How does one say it? The engagement to report on summary FS. It is summary. So here we will use concepts of big and small. In that, it was an audit of a single item, a piece. Of balance sheet, cash flow, AIE or chart audit, all of their financial statement is here in summary form. It's not big, it's small point. Balance sheet is this much, P&L 2, cash flow is also the notes and SOKI 2, this much. Who will do it? The person who is stat auditor of the company. He will make it mandatory. Engagement to report on summary FS can be taken only if the auditor has audited the complete FS, only if the auditor has audited complete FS. What do we call it? And what do summary FS reflect? Summary FS is definition. It is a derived financial statement, but which contains less detail than the FS, while still providing a structured representation consistent with that provided by the FS, meaning the full structure will be there, everything along with complete schedule, but in a summarized form of the entity's economic resources or obligations at a point in time or changes therein for a period of time. This is definition of summary FS. Before, CMO is here. What are the factors to be considered by the auditor before accepting an engagement on summary FS? Determine whether the applied criteria are acceptable. Who will prepare summary? Management according to the criteria. We don't need entire schedule of this data, just the total figure. Which criteria? Determine acceptability of applied ones. They are criteria applied by management in preparation of the summary FS. It refers to the criteria that management uses when preparing the summary FS. Now management is responsible for determination of the information that needs to be reflected in summary FS so that they are consistent with the entire FS. Who will prepare it? The management. Management is responsible. Next, this will be asked separately in MCQs. Factors affecting the auditor's determination of whether the applied criteria are acceptable. Factors affecting the determination of the acceptability of the applied criteria. Code is pink, starting with P, which matches purpose of the summary FS. I for information needs of the intended users of the summary FS. N for nature of the entity. Whether the applied criteria will result in summary FS that are not misleading, it will give true and fair view. These are the factors that affect the auditor's determination of whether the criteria are acceptable or not. Purpose, information needs of intended users, nature of entity, and whether the applied criteria will result in summary FS that are not misleading in circumstances. Next, we will obtain agreement of management that it acknowledges and understands its responsibility. For what? They are responsible for the preparation of the summary FS. Make the audited FS. To make the audited FS available to the intended users of the summary FS. And supply summary FS's users with complete FS's copy without any undue difficulty. How will the undue difficulty be reflected? Summary FS clearly indicates that. It's mentioned there. Complete FS is on the ROC's FA, so you will find its reference there. Number 2, audited FS are on public records on ROC's website. Provide your website's link there. And say third one on MCA's website. The management has a process. They ask you to fill a form and share link to the Google Drive. They give it once form's filled. How's undue difficulty reflected? Indicating that you got without difficulty. They said that summary FS describe clearly from whom or where audited FS are available. Number 2, audited FS are on public records. In 3, they have created a process. Okay. Next, it says here, agree with the management on the form of opinion to be expressed on summary FS. This is before. The questions about pink and undue difficulty are important. So, what will be the procedure? It will be a long one with a full time pass. Evaluate whether the summary FS discloses its summarized nature and identity. So, the audited AFS means full AFS and it's called AFS, and the summary is called SFS. If SFS are not accompanied by AFS. Evaluate whether from whom. From where the AFS be available, or where the law and regulation provided by the AFS will not be available. If available, then where. If we won't get it, then tell us the reason for the same. Evaluate whether SFS clearly disclose about the applied criteria. So please check and compare SFS with related information in AFS to determine that whether the data of SFS matches the data of AFS or not. FS is created from? It's created from the AFS. The debtor figure will match the total, right? If debtors are of 15 crore, then 15 crore should visible here. Okay? Evaluate whether SFS are prepared according to the applied criteria. SFS discloses the criteria. SFS is prepared as per applied criteria. Evaluate whether the information in SFS is not misleading in the circumstances. The AFS will be available to the users of the SFS without any undue difficulty. So this answer is for during, okay? Before done, during done. So now reporting opinion part. Okay, so firstly, you will read the questions number 1, 2, 3. 1, 2, 3 in 3 parts. Before and during are important and summary FS definition is important. So done, guys? So now, forming an opinion on what it says. So if the auditor wants to give an unmodified opinion, means a clean opinion on the summary FS, that's the smaller one, then what he should say, SFS are consistent with AFS in all material respects. It means it matches with AFS as per the applied criteria, and SFS are a fair summary of the AFS as it's a part of it only. That presented only in short form. So it's consistent, or you could say it's a fair summary of the AFS. If the law or regulation prescribes wording that is different from those, then you will say, then put those wordings. Apply that wording. Okay. Apply the procedure discussed earlier and any further procedures necessary to enable the auditor to express the above opinion different from law. Evaluate whether users of SFS might misunderstand the auditor's opinion on SFS, and if so, whether any additional explanation is provided by the auditors. Law has another opinion, you can write that by following procedure and writing the clarification about it. So you will not talk about true and fair here. What you'll say is it is consistent with the AFS, or it's a fair summary of the AFS. So now, if auditor concludes that additional explanation in report cannot mitigate the possible misunderstanding, they shouldn't accept the engagement. If law says to do so, then you have to. But when we write the report, we write a line that this engagement is done as per the. So when I say, you won't write that. An engagement conducted as per law and regulations. So it was mentioned about the misunderstanding which wasn't clear. Doesn't comply with SA. So therefore this report will not indicate that the engagement was conducted as per this SA. Won't come in report. Okay. Contents of the audit report are title, address, date, place, signature. Management responsibility, FS and AFS are prepared as per applied criteria. Management is responsible for preparing SFS as per applied criteria. That an auditor is required to express their opinion that the SFS are prepared as per the applied criteria and they have a fair summary of the AFS. And this engagement is performed as per the SA 810. That's the common answer. If you have my book page number towards the main book and in the model towards the end content of the report, it will be in your teacher's report. So take common answers. So what we will call it, modification to the opinion if the AFS contains the same thing, the qualify advance disclaimer, EOMOM. And if the AFS contains the qualified EOMOM, the auditor wishes to give clean opinion on SFS, you can give that. The auditor's report on the SFS shall contain the following. State that the main report on AFS contain qualified EOMOM and describe the basis for such qualification. Or EOMOM and second is the effect thereof on the SFS. If it is qualified, it is then the EOMOM. Not adverse or disclaimer, it's qualified EOM or OM. So what would you write in the SFS report is that it's like this only. State auditor's report on AFS contains a qualified EOM or OM and describe basis for such a qualified opinion on AFS. So the qualified opinion and the EOM or OM, the basis for the opinion should be written here in detail. And the effects on the SFS, but if. So students, AFS contains what? It contains adverse and disclaimer. So you'll say the auditor's report on SFS shall additionally disclose that auditor's report on AFS contain adverse or disclaimer. Told you the fact, describe the basis, explain the basis for both. And state that as very important as a result of the adverse or disclaimer opinion it is. So, students, it is an inappropriate act to express the opinions on the SFS. The 805 that I taught you recently was, what was in that? It contains the large report. So we are talking about the adverse or disclaimer. So you cannot give an opinion on a single FS, you cannot give a clean opinion on a single FS, but can give clean on specific AIE. There were 3 conditions. The law has not disagreed, it's not part of it, and the reports are different. I am reading 810. So here he says that in the qualified EOMOM, if there is no problem, so all you need to do is that you have to write there about the situation. Basis for the qualified opinion, that qualified opinion EOM or OM, and the effect on the SFS, if any. So I hope it's clear to every student. But if the audited FS contains an adverse or disclaimer, if contains an adverse or disclaimer, now what will you say as it contain adverse or disclaimer there? Describe the basis for adverse disclaimer and state that due to adverse disclaimer, it is inappropriate to express an opinion on SFS. Okay. So now, when do we modify? When SFS is not consistent or not as per applied criteria, or the management refuses to make changes, auditor shall express adverse opinions. Then read pages 4.8 to 4.11 in the book. Just read that section. There are some additional points. If the audit report on the SFS affects the if the auditor's report on the SFS is after the after the completion of the audit of FS. If the auditor's report on the SFS is issued after the completion of the audit of FS, this is important, then he is not required to obtain any additional evidence on the AFS or to report on the effects of the events that occurred subsequent to the date of his report, because SFS report is submitted on AFS since SFS are derived from the AFS. So what you will say is SFS derived from AFS. If auditor's report on SFS after completion of the audit of FS and you have given the FS report, after that you have given SFS report here. So now do I have to do anything for subsequent event? No, because you know that the SFS have derived from the AFS, right guys? From AFS, then there is no need to do anything. It's done. The opinion one is very important. It can come in your exam. Read point number 4 and 6. Fifth is a normal or common answer. Read 4 and 6. You can read this. Done reading. It's finished. So with this, your 800, 805, 810 is finished. It's properly complete. Okay, students. In the next class, we'll start new by students. So hello, students. So yes. Now students, let's start with a new topic. We are starting now with ESG. The topic is ESG. So SDG and ESG is very simple. A 4-mark or 6-mark question will appear in the exam. One of these questions will be there. Let's start this. The first is SDG, Sustainable Development Goals, is just like the EVS. It just has rote learning. There's no logic involved. So in this, there is no such logic. So what written here is explain sustainability. This topic is simple. So because of that, we won't be spending much time on this particular topic. Sustainability is a concept relating to development of what? Products, goods, and services that involves meeting the needs of the current generation without compromising the ability of future generations to meet their own needs. So students, are you understanding this line? So you are meeting the needs of current generation without compromising the needs of future generations. Ability of future generations to meet their needs. Sometimes it is also called sustainable development. So it is also called sustainable development. So students, are you getting this point of sustainability? It has 3 pillars of sustainability: environment, social, and governance. So environment, social, governance. So what is the environment? So environment include corporate climate policy, energy and water pollution. Write 5 or 6 things according to you. Natural resource, conservation, treatment of animals. It includes the natural resources that every entity absorbs for its functioning, like electricity, coal, water, and so on. One is dependent on the environment for carrying out its operation. So company depends on environment. S. Social. These are the people. For example, the Reliance must be doing something for them, and same for Amul. Both are contributing to the people of Gujarat. Assume there is a company in Karnataka. That company has done something for the people of Bangalore, means for the people of Karnataka. It addresses the relationship the entity has and its reputation in foster with people and institutions in the communities where they do their business. It further includes labor relationships, diversity and inclusion. Social means relationships with people, and environment means relationship with environment. Social means relationship with people. So it's like someone built a flower. No, not flower. What's the word? Yes, fountain. They built a fountain, a garden, and a public place. Governance. So that is basically what the law requires. It's an internal system for practices, controls and procedures that an entity adopts to govern itself, making effective investment decisions, complying with the law, and meeting the needs of all stakeholders. Every entity which is itself a legal creation requires governance. Government will comply all the rules, regulations. So there are three pillars of sustainability: ESG, environmental, social, governance. These 3 pillars are divided into categories along with examples. Remember that there is a water stress and the carbon footprint, packing material and waste and e-waste. In social, it's labor management, product capital, human capital, financial, and product safety. Governance consists broad diversity, ownership, business ethics. We should not engage in anti-competitive practices, should not take bribes, corruption, and instability. So above pillars include the following elements. So questions of 2, 3, 4 marks, like what is sustainable development? What are 3 pillars? What each pillar include in it? 3 pillars are ESG, environment, social, governance. All 3 aspects: the environment, carbon footprint, water stress and raw materials, packaging, e-waste. Social aspects: labor management and human capital. Product safety and quality, privacy and data security, and in governance, broad diversity, anti-corruption. Anti-competitive practices, corruption, business ethics. So ESG reporting can be both quantitative and qualitative. Quantitative refers to numbers. Qualitative means the work being done, like we did CSR and changed so many lives. Like this much we have donated. Gave the vaccine for COVID, so it comes in quantity. Kind of work is referred to qualitative. ESG reporting can both quantitative and qualitative. Qualitative aspect describes the company's strategy and policy about the work. Quantitative approach includes things like matrix and key performance indicators, which are called KPIs. Link with each area, measure progress against goals, and report on achievements. That's quantitative approach. So what are Sustainable Development Goals, SDGs? Okay, so the Sustainable Development Goals are 17 goals. It was adopted by all United Nations members. States to provide a blueprint which mentioned Sustainable Development Goals. And there were 17 SDGs. It was like story plus call dippers, story plus call dippers. What's in this? Here, if I study and become a CA, then there will be no poverty. It's sorted. There will be zero hunger. My family will eat healthy and nutritious food. It will lead to good health and well-being. My kids will receive quality education and they will understand the importance of equality for all. There won't be any gender-based discrimination in the society. This will lead to gender equality and reduce inequality. Gender equality and reduce inequalities. 6 points in total. Under SDGs, education eliminates the poverty. It includes zero hunger, good health and well-being, then quality education will lead to everyone understanding need for equality and reducing the inequality. Call dippers, CC stand for clean water and sanitization. It's clean water and sanitization. Then climate action. A is for affordable and clean energy. L is for life below water and life on land. LL is for life below water and life on land. Now, let's talk about dippers. D stands for decent work and economic growth. Then I stands for industry practices, innovation and infrastructure. Now come to P. Means peace, justice and strong institutions. Then partnership for the goals. Responsible consumption and production, sustainable cities and communities. This makes call dippers. What's the first one? Story, no poverty, which will lead to zero hunger. So good health and well-being. Quality education will teach importance of equality. It will lead to gender equality and reduce inequality. Cleanliness under clean water and sanitization. Then climate action. Affordable and clean energy, life below water and life on land. D is decent work and economic growth. Industry, innovation and infrastructure, peace, justice and strong institutions, partnership for the goals. Responsible consumption and production, sustainable cities and communities, called dippers. What are the global trends in sustainable development? For this, just refer and read page 485 in the book. That's for trend, and for those studying from the model, inside the model, you will find third answer referring to the global trends. Just read that. So, this is an important question from the exam's perspective. What are the 6 C's of integrated reporting? It is asking about the 6 C's. Code for this is Miss Finn. Create your own codes for your convenience to remember, like Miss Finn. M is manufactured capital, how much manufactured. S is social capital, human personal relationship. Financial capital, amount of money invested, and I for intellectual capital, number of scientists. N for natural capital means natural resources, and H is for human capital. Miss Finn means manufactured capital, social capital, financial capital, intellectual, natural and human capital. I will repeat. Manufactured capital, social capital, financial capital, intellectual capital, natural capital and human capital, and this can come in MCQs. We did this in module also. Next. What's there in question number 5? It says, what is sustainability reporting? Can you list some of its benefits? Sustainable development means meeting the needs of current without compromising the ability to meet the needs of future generations. Sustainable reporting is an organization's practice of reporting publicly its economic, environmental and or social impact, and hence its contributions, whether positive or negative, towards goal of sustainable development. The report that is created on sustainable development is called sustainability reporting. What's the benefit? It's information that companies provide about their performance to the outside world on regular basis in structured way. Sustainability reporting becomes annual reports part. What's the benefit? It helps stakeholders to understand the organization's performance vis-a-vis sustainability and impacts. Everyone can earn money, but did they meet the people's needs? How much was the damage caused to environment? Whether they took the well-being of people around them and their employee and the natural resources into consideration or not. Next, such reporting can help entities to focus on long-term value creation by addressing environmental social governance issues. Investors can use ESG performance of companies to make investment decisions. Higher the ESG score, the better the investment. Take Starbucks, which now uses paper-based eco-friendly products. Bamboo-based glasses are also used. Why is that? They are environmentally friendly, so good score. Investing in social and environmental issues will improve business, like Reliance. Mumbai Indians endorse ESA, means education and sports for all, and supports people. Procter Gamble P&G. It supports education. You must know Head and Shoulders. It's P&G. They support education through it. Tata has its own campaigns. Wipro also has separate funds for this. Some sponsor marathons. You must have heard about the Standard Chartered Marathon. They are all for social impacts. Investing in social environmental issues not only improves business continuity of companies, but also puts them in better B2B customers and enables them to acquire new ones, helping with mergers and acquisitions. Question 5 is not directly from module, but answer is from module. Sustainability reporting's benefits. Maybe it's in TYU, so I have included this here. Read questions number 4 and 5 again. Which ones? 4 and 5. Is this done? Next, what are the global scenarios in various countries? What happens in US? As per Securities and Exchange Commission, companies are now required to discuss financially material climate-related risks guided by the Task Force on Climate-Related Financial Disclosures, or TCFD as it is called. What is there in it? Reporting would include company's risk management process, climate risk management process, how the risks identified would impact company's financial performance, how those risks are managed and mitigated, meaning how they are removed, any scenario analysis, transition plans, and publicly announced climate goals. So points are climate risk management, identification of risks, their impact, risk management and mitigation, any scenario analysis, transition plans, and so on. UK uses an almost similar one. It's hard for both to come in exam, but in case they do, answers are almost same. What's in it? UK passed a law targeting net zero greenhouse gas emissions, GNG emission, zero greenhouse gas emissions, by 2050. It applies to large companies that are either listed or exceed 500 million pounds in annual turnover or have more than 500 employees. Those companies come under category of large companies. They need to discuss about ESHA. What is ESHA? It stands for Environment, Employee, Social Matters, Human Rights, and Anti-Corruption and Anti-Bribery. ESHA focuses on environment, employees, social matters, human rights, anti-corruption, and anti-bribery. The answer is almost same. The report about climate change-related risks, how risks and opportunities are managed through targets and KPIs, how climate change is addressed in corporate governance, and how climate impacts corporate strategy. Common answers for both. It's common, okay? Next, what are the initiatives taken by ICAI for sustainability reporting? What are the initiatives that should be taken by ICAI for sustainability reporting? ICAI has established SRSB. So this Sustainability Reporting Standards Board will oversee everything. Then ICAI started some certificate courses on sustainable development goals and business responsibility reports, integrated reporting, and also proposed NEDP, Executive Development Program on Business Responsibility Reporting. ICAI published many books on standards on assurance engagements, 3410 assurance engagements on greenhouse gas statements, and background material on BRSR and sustainable development goals. For 3 or 4 marks, ICAI might have done it initially. What has ICAI done? It took all these initiatives. So just read these initiatives once. Done. Look at question 8. What are the initiatives to be taken by ICAI? But this is already done. Let me change it. Question 8 says, what is BRSR? What is Business Responsibility and Sustainability Report? It states that, so reporting under BRSR is mandatory from financial year 2022 and 23. From year 2022 and 23. The question is divided into three sections: GMP, General Disclosures Management Process, and Principle-Wise Performance Disclosure. In GMP, G is for General Disclosures, Management Process and Disclosures, Principle-Wise Performance Disclosures. This section contains details of the listed companies, its products, services, operations, employee-related details or KYC. Management process contains questions related to policy and management. Process is governance, leadership and oversight. Principle-wise performance disclosures. Companies are required to report upon KPIs in alignment with 9 principles of NGRBC. Now these 9 principles will be discussed further ahead. We will see them. These are categorized into 2, essential indicators and leadership indicators. Essential indicators are mandatory. Leadership indicators are optional. We will call this M-LO. In this M-LO, M means essential is mandatory and LO means leadership is optional. M-LO, essential, mandatory, leadership, optional. Next, what are the 9 principles of BRSR? Questions on BRSR are asked till 2-3 attempts. So how do we code this? 2, 3, 4, I repeat, 2, 3, 4, 2 for the environment, 3 for social, 4 for governance. This is the breakup of the 9 principles, 2, 3 and 4. And just remember them as Yeshas Epic. The heading here is, the book has many one-liners, memorize them. The first in Yeshas Epic says, ethics, transparency and accountability. So ethics, transparency and accountability. S stands for safe and sustainable goods and services. Once more, safe and sustainable goods and services. In Yeshas, E is for ethics, transparency and accountability. Then safe and sustainable goods and services. One more E, promote well-being of all employees including those in the value chain. E is for all of the employees' well-being, okay guys? S is for respect for stakeholders' interests and responsiveness. S in Yeshas stands for this. H stands for respect and promote human rights. So human rights. Next, Yeshas means ethics, transparency, accountability, safe, sustainable goods, services. Employees' well-being. S for respecting stakeholder interests and responsiveness. H for respect and promotion of human rights. Epic is protection and restoration of environment. P means influence in public and regulatory policy. I means promote inclusive growth and equitable development. C for promote value to consumers in a responsible manner. So what would be the code for this, students? The code for this would be Yeshas, Epic. So Epic is about protecting environment, influencing policies, promoting inclusive growth and equitable development, and creating consumer value responsibly. This is Yeshas Epic, and it is very important for exams. MCQ may come, descriptive questions may come. You may be asked to write all 9 principles. See page 493 for details. Module users should follow that. Now, reporting on BRSR or business responsibility and sustainability reporting. What is assurance? In India, reporting on BRSR is mandatory only for the top 1000 listed entities. ICAI issued a Sustainability Assurance Engagement Standard. SSAE, Standard on Sustainability Assurance Engagement 3000. This standard deals with assurance engagements of an entity's sustainability information. This standard applies for assurance engagement which pertains to provide reasonable assurance on the sustainability information under effective date of application on voluntary basis. For assurance report covering periods up to 31st March 2023 and on mandatory basis from the period ending on 31st March 2024. ICAI also issued SSAE 3410. People complied with SSAE 3000. What does 3410 deal with? Greenhouse gas statements, which deals with assurance engagement on entities. Sustainability information including assurance of BRSR, separate for both greenhouse gas emission and sustainability reporting. Reporting in BRSR is mandatory for top 1000 listed entities as of today. Read 10th question. See its answer. Okay, now, the methodology to provide assurance in BRSR. There are steps. There are to the point questions without any explanation. First, preliminary review of the ESG report parameters. A preliminary review of the ESG reports and parameters. Then on-site assessment and verification of ESG report. Third, issuance of assessment report and assessment statements. Review of the responses and clarification on findings. Submission of the findings of the on-site assessment and document review. Preparation of assessment reports including financial results of the assessment. I explained this through a story. Though you need to pass, but imagine you haven't, you had extended a request for the papers. A preliminary review of the papers, meaning the ESG report and parameters. These suggested checks were performed. You personally reviewed the online assessment and verification of ESG report. You personally reviewed it. You performed on-site assessment, verified the ESG report and matched it with the suggested. If you find an issue, then you issue it to your teacher. For instance, you sent me the paper related to the assessment report. Review of the responses and clarifications on the findings. The teacher approved it. You will submit your findings from the on-site assessment and document review to the ICI. You will send this as a formal mail. This email will contain the entire assessment verification report, including the final recommendations assessment. You need to remember the answer through the suggested. Now, what is the role of an auditor on the ESG aspects in the audit of a company? What will be the answer? What is the auditor's role in ESG aspects? It involves several key points. The role of the auditor is to obtain reasonable assurance that the financial statements are free from material misstatement due to fraud or error. Clear? It should report that the FS are prepared as per AFRF. In developing an understanding of the entity, the auditor should consider climate-related risks and how they are relevant to the audit. The first 2 points are common and standard. Which risk you should consider? Climate-related risks and their relevance. Climate risk could be more relevant for certain industries like banking, insurance, and agriculture. The audit report communicates key information about users, management's responsibilities, and significant matters addressed, and how they were addressed. In this context, what can an auditor do? They may include EOM para to draw attention that are of fundamental importance to the users. And sometimes the auditor should also read the other info for consistency with the information disclosed in the FS, like annual report and press release as per SA 720. So they just used standards to create answers. What is the purpose of an audit report? The role of an auditor on ESG aspects, right? So out of the 12 questions, you will see any 2 in your paper because it is a new chapter that was not present here before. Understood? Questions from our module and TYU are to be covered. Cover the questions from the module and TYU. You have to learn them by heart. It is important, the 9 principles of NGRBC. 17 SDG goals. You should remember them all. There is no way around it. You need to memorize them. Okay? Remember 2, 3, 4. ESG 2, 3, 4. Right? Okay. Bye everyone. We'll start a new chapter next. Bye. Hi students, how are you? So now, we're starting with an interesting topic. It's my favorite topic of all the topics in the series. SAE. It states, Prospective Financial Information and Other Assurance Services. SAE 3400 3402 3420 3400 3402 3420. Let's start one by one. So what is the first one? SAE 3400. So what does it talk about? It talks about examination of prospective financial information. What does prospective mean? When we take a loan from a bank. So you have to prepare financial statements for the next year, meaning for the next 1 year, 3 years, and next 5 years. And the management will be preparing them for you. And there should be some assurance on it. And when there is someone's assurance on it, then there has to be some CA for this, right? CA with a COP. Okay. For example, I think we've learned up to 810, and all the engagements can be done by CA plus COP. So this is our PFI, right? And PFI stands for Prospective Financial Information. Examination of PFI. This is financial information based on assumptions or events that may occur in the future and possible actions by an entity. It is highly subjective in nature and requires considerable judgment because what will my future look like? What will the sales and purchases be? The judgment is ours. It can be in the form of FPC. Forecast projections combination. Let's talk about forecast projection combination. What exactly does forecast mean? So, a forecast basically means prospective financial information, which is prepared on the basis of assumptions to the future events, which management expects to take place, meaning that it could happen, and the actions management expects to take as of the date the info is prepared. So the next step is to determine what is our bad debt or provision is. That's our focus. And what actions will management take? Best estimate assumptions mean an assumption that reflects anticipated experience with no provisions for risk of adverse deviation. We know our sales have been increasing by 10%, so we expect next year's sale to rise by the same. This projected data is called forecast. After 5 years, the data is referred to as a projection. At this stage, we applied the best estimate assumption. It may not be 100% accurate, but it will be correct 99%, 90%, or 85% of the time. What is projection? If the PFI is prepared on hypothetical assumptions, it may or may not occur. About the future events and management actions that are not necessarily expected to happen. My sales will reach 100 crore. It's uncertain. A mixture of best estimates and hypothetical assumptions that are imagined or suggested. The term auditor in this SAE doesn't specifically refer to the company's statutory auditor. A company's statutory auditor isn't required, a different auditor can be used. However, under 810, only the statutory auditor can handle the engagement. An opinion as to whether the results shown in the PFI will be achieved. So of course we can't predict. We are not stating here anything concrete about it. In the forecast topic, when we refer to the accuracy of the forecast being at 80-90%, the management has prepared the financial statements which are called projections for the next year. And based on their experience, it seems to be accurate. But it won't be accurate as there won't be major deviations. So what does the auditor do? The auditor just provides reasonable assurance, but does not guarantee any specific outcomes in the case, such as exact future sales figures. He does not guarantee as he can't predict. An opinion as to whether results shown in PFI will be achieved cannot be expressed as. It is future-oriented and speculative in nature. Okay? Responsibility for preparation and presentation for PFI. The management is responsible for the preparation and presentation of the PFI, including identification disclosure PFI, explaining the basis of the forecast and the underlying assumptions. One has to make it. The basis for the forecast and underlying assumptions will be handled by the management only. Remember it. This question is given in the module, that's why it's important. Can a professional accountant be linked to the PFI? This includes any CA with a COP. Did someone tell you not to make it? You can do it on your own. And earlier, the attest function performed by a CA IP has been in relation to historical financial info. Nowadays, investors intend to place more reliance on what? Reports of the projected cash flows and profitability statement. Then we have 3.1.2. Clause 3. First part, second schedule. The CA Act 1949 states, CA in practice shall be deemed to be GPM if he permits his name or his firm name to be used in connection with the estimate of future earnings, which is contingent upon future transactions in a manner which may lead to believe that he vouches for the accuracy of the forecast. So who forbade forecasting? No one stopped from making projections. You can give your name or your firm's name, but you cannot vouch for the accuracy of the forecast. We can forecast, but we cannot vouch for the accuracy of the forecast. A CA in practice in preparation of PFI will provide the sources of information, the basis, and the major assumptions. These three things should be provided. Sources, basis, and major assumptions. In arriving at forecast, as long as he does not vouch for the accuracy of forecast. As long as he does not vouch for the accuracy of the forecast. The same applies to the projections based on the hypothetical assumptions. Whether it's a best estimate or a hypothetical assumption, in both cases you can forecast but cannot guarantee accuracy. You must disclose the sources of information, basis, and major assumptions. Right? Read the question 125. So one set of answer is intro. It's the same pattern of before, during, and report. Read all of them carefully. Is it done? Now, question number 7 states, what precautions should the auditors take before accepting such an engagement of SAE 3400, meaning it is from before? As we have studied the penal code, so here it has become I Pune. Right? Whether the information will be for general or limited use. The period covered by the information, the intended use of the information. N indicates if the assumptions are best estimates or hypothetical, while E refers to elements included in the information. So the code will be I Pune. I Pune. Factors to consider include the scope of distribution, the time period covered, the intended use of the information, and whether the assumptions are best estimates or hypothetical. E means elements to be included in the information. Now, if the assumptions are unreliable or unrealistic, or the auditor believes that the PFI will be inappropriate for the use, in that case, you should not accept the engagement. If you have accepted an engagement and you think it is unrealistic, then you should withdraw from it. If it is not accepted, then it's fine. If you have accepted it, then you can withdraw it. Okay, then how would you perform? What procedure will you perform for the engagement of SAE 3400? Okay. Someone told me that the answer was KLC mess. KLC mess. Many have shared different codes and you can create your own. What process will you follow for SAE 3400 engagement? So what is the management's competence regarding the preparation of the PFI? Management's judgment significantly impacts the PFI as it determines next year's projected sales, profit, debtors, and creditors. How many bad debts are expected? Knowledge obtained during any previous engagement. It refers to the knowledge obtained. And what is the engagement team's experience with the business and the industry? So it refers to the experience. Then the next point is the likelihood of a material misstatement. The stability of the entity's business and the sources of information considered by management for the purpose, adequacy, and reliability of the underlying data. This is an important point. What are the procedures for performing SAE 3400? Management's competence is regarding the preparation of PFI. The extent to which the PFI is affected by management's judgment and the knowledge obtained during the PFI. During any previous engagement, what was the engagement team's experience with such similar engagements? Likelihood of material misstatement, the stability of the entity, and whether it will continue to operate. And what sources of information does the management consider and where do they get it from? What matters to be considered for the presentation and disclosures of PFI? The presentation should be informative and not misleading, right? It says the presentation should be informative and not misleading. The accounting policy should be clearly disclosed in the notes to the PFI. Then, the assumptions are adequately disclosed in the notes to PFI. First, the presentation is informative and not misleading. And number 2, accounting policies are clearly disclosed in the notes. The assumptions and the date on which the PFI is prepared are disclosed as well. Point range means on a year-on-year or quarter-on-quarter basis what point range was taken. And the range is not selected in a biased or misleading manner. If there's a change in accounting policy, which is disclosed in the historical financial information, whether the reason and the effect of such change in the PFI. A question may arise if there's a change in your main historical financial information's accounting policy. So you will have to mention the change that you make here. The reasons and effects of such changes must be properly disclosed. Same point, what are the contents of the reports that we commonly prepare? Title, addressee, date, place. Sign FRN UDIN. The management's responsibilities, the auditor's responsibilities, and this engagement have been performed in accordance with SAE 3400. Now another point arises. We have another point on assumption basis and reasonable in this SAE, and that point has to be written down. Any one point will appear, at least one. Any one report could appear in the paper. Right? Okay. Please quickly recall answer number 6, 7, 8, 9. Recall the answer number 6, 7, 8, 9. Okay, read. Done? Cool. So now, let's start with SAE 3402. Guys. Okay now, so it is linked to 402 if you remember it a little bit. Guys, if you remember the following data about AB Limited. So, over here, what is AB Limited doing? Their services. Sorry. AB Limited outsourced its accounting and payroll services to TCS. So, TCS is providing them with outsourcing accounting services. And AB Limited is paying them. Ram is auditor of AB Limited. When Ram goes for the audit, he sees that these services are outsourced. He have to check how accounting is done and everything. So if question comes from auditor's perspective, who is Ram? Or stat auditor's perspective, so write 402. 402. So what's the matter here? So guys, AB Limited is user entity over here. TCS is service entity. So the service entity appointed Shyam as service auditor. It is service auditor which can be of many types. So it could be stat auditor of TCS or it could be some other CA plus COP. He has to prepare report. So stat auditor will do stat audit work. If Shyam is stat auditor, he will provide stat audit report, but here he will provide another report. He will prepare a report on the controls of the service entity. Okay? Students, he will tell you how your controls are. Whether they exist, are they equal or are they operative, which means they are effective and operational. But now who will create them? The service auditor will create them. So if the question comes from Shyam's perspective, then we will apply 3402. Whereas if it is from stat auditor's perspective, then we will apply 402. Okay. Explain. Service entity, user auditor and service auditor. The question is asking for an explanation of the given terms. Service entity refers to third-party organization or a segment of that provides services to user entities that are likely to be relevant to user entities' internal control as it relates to financial reporting. The firm whose audit is in process is user entity. It refers to entity that uses service organization. Now it's vice versa over here. User auditor is the auditor of user entity. It refers to auditor who audits and reports on the FS of user entity. Who is service auditor? It refers to a professional accountant in public practice, who at request of service organization provides an assurance report on controls at service organization. So the person who will give report to TCS will be known as service auditor. Now question 2 is important as given in module. So students, the question which is given is, why controls of service entity are important to a user entity internal control relating to financial reporting? Students, this is the question. Do you understand what it means? Yes or no? This is important. So, AB Limited is using services of TCS. So data is going from them. When, how much and what is the value of the data that goes? They are providing services. Are services matching or not? Will they be able to meet the needs of AB Limited? Because if the client leaves, the entire project will be over. Controls related to service entities' operations and compliance objectives may be relevant to user entities. Internal control, as it is relevant to financial reporting. Because when stat auditor, which is Ram in this situation, will go for audit, he will look at control systems. In that, he will look at accounting and payroll, that is outsourced. Stock verification is outsourced. So there must be a system in place for it. That system is TCS. What controls does TCS have over it? We have to look at stat audit of AB Limited. Search control may be regarding presentation disclosure about TABD. Transactions, account balance disclosures, which means balance sheet, P&L statement and notes to the accounts. Then, controls at the service organization include aspects of the user entity's information system, which is maintained by service organization and may also include aspects of one or more of other components of internal control at service organization. What will they do? When they build the system, the report will include details about how the AB Limited system works, what is exactly done and how is it done. The determination of whether controls at service entity is relevant to user entity internal control is matter of professional judgment. Okay. Fourth point. So, now it asks to explain type 1 and type 2 reports. Guys, can you explain type 1 and type 2 reports? Okay. What is type 1? The system is existing. Type 2. System is there and is effective. The system exists there and is more effective. It comprises of service entity's description of its system. Under type 2, it is also same. Written assertion by the service entity. Description fairly presents the system. Audited service system was designed and implemented on specified date. So they will describe the system. And it was designed and implemented on a specific date. And controls related to control objectives in service entity's system were suitably designed on specified date. So the systems are good and the controls designed for it are suitably designed on a specified date. Same point over here. So descriptions of the system. Now students, the controls related to the system. Control related to control objectives in the system were suitably designed on specified date. Third, controls related to control objectives in system as described is operating effectively throughout the period. So it is effective throughout the whole period. It is effective throughout the period. Here we are saying there is a system which exists for a specified date. So controls related to control objectives, meaning controls that are part of system, are designed on specified date. So we are saying that they are effective throughout the whole period. Okay, students? Now, Service Auditor's Assurance Report will convey assurance about matters referred in point 2. The Service Auditor will say that what the management has mentioned above is correct. Here, it says Service Auditor's Assurance Report conveys assurance about matters. Referring number 2. It includes description of the test of controls and the results thereof. So students, did you understand what I am trying to explain? Test of controls and what were results of that? Then, next question is procedures for SAE 3402 in service organization. There were many points, but you can write any 6 to 7. They will have to check materials, gather evidence, check controls, and they have given complete list. You have to learn the heading directly from the book. Then, now the question is, what will be the matters of WR to be asked by the service auditor? WR is written representation. So our service auditor, which is auditor of TCS, will go to management of TCS. He will provide some writing which are AADD na. Are you getting what I am trying to explain? So you will write AADD na. Reformulate assertion regarding the description of system. If system is correct, then write it down. It has provided the auditor with all relevant information and access agreed. It has disclosed to the auditor any of following matter of which is it aware. Assertion regarding description of system. All information and access is granted. Disclosure to auditor about following information. So, D stands for design deficiency in the controls. I for instances where controls have not been operated as described. Design deficiencies in controls and instances are examples where controls were not working properly. Non-compliance with laws and regulations, fraud, uncorrected deviations attributable to service organization. A for any event subsequently to the period covered by service organization's description of its system up to date of service auditor's report that could have significant effect on the service auditor's assurance report. So what will you write here? Design deficiencies in controls. Instances where controls have not operated as described. Non-compliance with laws and regulations. Fraud, uncorrected deviations, and any subsequent limitations. Now important question. What will the service auditor get written from service entities management is what I just explained. Is that okay? It will be AADDNA. It is assertion, access, and D stands for disclosures. And what are the disclosures? First, design deficiencies and controls. I for instances where controls are not being operated. N for non-compliance with laws and regulations will follow. A for any subsequent event. Then, now let's come to questions. 1 to 5. Read question 1 to 5. Done? Okay, now. Contents of report. So students, the answer will be common. Title, addressee, date, place, sign, FRN in UDIN. And then, identification of criteria and party specifying control objectives. Identification of service entities, description of its system. Those part of system which aren't covered by service auditor's opinion. Statement that service entity is responsible for preparing description of its system. Providing services covered. Stating the control objectives, designing and implementing controls. To achieve control objectives. It's same point. Statement that engagement was performed as per SAE 3402. A statement that it's service auditor's responsibility to express opinion on the service entity description, design of control and operating effectiveness of that control. Is it okay? This was content of report. Common answer. Any of these two will definitely come in the exam. Okay, now. Question 7 is very important because question from this topic is also given in the module. What are the additional matters required in a type 2 report? So it should include a separate section after the opinion or an attachment. That describes the test controls that were performed and results of those tests. In test of control, it was result thereof. It shall disclose that controls were tested on all items or selection of items in population and indicate nature of test. What should it disclose? Control was tested on all the items or selection of items in population. And indicate the nature of tests. If the deviation have been identified, the reason, number and nature of deviations is identified. If deviations have been identified, then the reason, the nature and the number of deviations is also identified. Now on basis on tests performed, the service auditor shall state that he has concluded that risk control objectives were achieved. Did you understand it? Tell me. When will the service auditor modify their opinion? We have to reciprocate what we studied about system design description. So I have written refer to page 3 to 7 in main book. Just read from there. Module people will read from module. What documentation is needed? It's the same answer we did in SRS. NTE and results of procedures performed, evidence obtained, significant matters rising during engagement, conclusion reached, significant professional judgment made in reaching conclusions. NTE of procedure performed. Result of procedures performed and evidence obtained, significant matters rising during engagement, conclusion reached, significant professional judgment made in reaching those conclusions. Okay. So guys, this is your SAE 3402, 340. Okay. Read this. 6, 7. This should be 6, 7, 8, 9. Okay, guys? Documentation is important. It's common. Everyone will have same documentation and reporting. Now read. Completed? No? So the next one is SAE 3420. It is very simple, guys. Understood? What does it say? It says about PFFI assurance engagement to report on the compilation of PFFI pro forma financial engagement. So the pro forma financial information, it is basically included in the prospectus. So guys, what is it? It is the data that we have from the current year. What is PFI? The data of future or next year. The forecast and projection. What is PFFI? PFFI refers to financial information shown together with adjustment to illustrate the impact of an event or transaction on adjusted financial information. For example, if we do an IPO. So after the arrival of IPO, how would our FS look like? If our merger happens, how would our FS look like? What do we call it? PFFI. Who will create PFFI? Management. Then a practitioner will create and submit a report. See this. PFFI refers to financial information shown together with adjustments or to illustrate the impact of an event. The transaction on the unadjusted financial information, as if the event has occurred, or the transaction had been undertaken at an earlier date selected for the purposes of the illustration. Okay? The PFFI can be in the form of P&L balance sheet and notes. It is included in the prospectus. It is achieved by applying pro forma adjustments to unadjusted financial information. We make pro forma adjustments to unadjusted financial information. So it does not represent the entity's actual financial position, financial performance, or its cash flow. It only tells us that if your event has occurred, then how your FS would look like. Okay. Now, okay, so guys, tell me what is pro forma adjustments. So, it includes adjustments to the unadjusted financial information. So now, adjustments to the unadjusted financial information that illustrate the impact of what, guys? So that illustrate the impact of an event or transactions on adjusted financial information as if the event has occurred or transaction was undertaken at an earlier date. For the purpose of illustration, you can copy this definition. Adjustments to unadjusted financial information that are necessary for the purpose of PFFI to be compiled on the basis. Please note, for the purpose of PFFI to be compiled on the basis of AFRF. Definition of pro forma adjustment may be there in exam. This is important. What are the steps involved in process of compilation of PFFI? Identifying the source of unadjusted financial information. To be used in compiling PFFI, where is it coming from? Extract the unadjusted financial information. Identify the source and extract. Pro forma adjustments to unadjusted financial information. For the purpose for which PFFI is prepared. Presenting the resulting PFFI as per the accompanying disclosures. And extract the unadjusted information. Make pro forma adjustments to unadjusted information. Okay? So, presenting the resulting PFFI with the accompanying disclosure. These are the steps. First, identify the source. And extract the information, make pro forma adjustments. Present the resulting PFFI with accompanying disclosures. Moving on. Compilation of PFFI is a responsibility of the management. Okay then. What points should be considered by the practitioner before accepting engagement for SA 3420? This is before's answer and then during and report. So before. Determine the practitioner has the competence and capabilities to perform the engagement. Determine the criteria suitable for PFFI is not misleading. Determine the practitioner will likely be able to express the opinion so as to describe the procedures performed. As per SAE 3420, we can give opinion on basis of procedures performed on 3420. Okay? Where the sources from which unadjusted financial information. The acquire, which means target. Or guys, the divestee financial information have been extracted. Have been audited or reviewed. Whether the FS has been made, but whose? Acquiree and divestee. We are the company means we are acquirer. The one being acquired is acquiree. There is investment, which means divestee. So guys, after doing it, where did their FS came from? If entity's historical financial information is never audited or reviewed, can our practitioner retrieve the information to perform the engagement because audit has never happened? Are all these factors in before? It's an important point, it will have a question. To take WR from management. Obtain the agreement from the responsible party management, acknowledging their responsibility for providing access to all info and additional information that practitioners may request access to those within the entities and advisors. And when needed, for purpose of engagement, access to individuals within the acquirees in a business combination. In business combination, information is receivable from others. So, access to information, additional information that practitioner requests, access to those within entities advisors, And if we want to meet the acquiree, we will also have the access to acquiree's people. Okay guys, WR is important. Fifth, what we will do is during CA SAMR, check the criteria suitable as required by framework for engagement. Now A, the practitioner shall determine if responsible party has appropriately extracted unadjusted information. And is the criteria suitable? So he shall obtain evidence of source from which unadjusted financial information was taken. The practitioner shall obtain evidence about the appropriateness of the pro forma adjustments. Practitioner shall consider materiality factors while evaluating PFFI has been compiled and responsible party. Okay? Did they compile the PFFI correctly or not? An understanding of how the responsible party has compiled the PFFI and other engagements in the circumstances. Okay, so this is your procedure. Okay, important answer is about what is the management's responsibility. Now question 6 is what are the contents of WR? He shall request WR from the responsible party. In compiling the PFFI, responsible party has identified all PFFI. Pro forma adjustment to illustrate impact of event or transaction at the date. Period of illustration or PFFI compiled based on applicable criteria. So I have given us all the information and the impact of pro forma adjustments has been reflected in PFFI. The PFFI has been compiled based on the applicable criteria. Very rare in exam. Management's responsibility can come in exam, it's important, remember it. How would you express? So, when practitioner concludes PFFI has been compiled as per the criteria, do unmodified opinion. If PFFI has not been compiled, then you modify it or request the management for some change. If the management agrees, then it's good. If they refuse, what will you do? You will withdraw and seek legal advice. What are the contents of report? They are title, addressee, date, place and sign. Management's responsibility and practitioner's responsibility. And statement that engagement was performed as per SAE 3420. So the PFFI has been prepared as per the applicable criteria. Then write this line, that pro forma adjustments reflect the adjustment, then write about unadjusted financial information. It is the answer. Okay, done. 3420 has less chance. So either you will get the PFFI one, which also seems logical. Either that or the SAE one. Okay. So I'm giving you 5 minutes to go through this. Just finish it. Read this. Completed. So 3402, 3420, 3400. PFFI answer is important. Proforma adjustment definition is important. Type 1 and type 2 report definitions are important. Okay. Along with this, do its TYU, okay? And do its previous questions. This is important. TYU would be 3, do them. Okay. So we will meet in the next class. Bye guys. And aim for a rank or 70 plus, whichever is higher. Hi guys, what's up? Welcome to the class. So today we will be starting the class with digital audit. So whatever books, notes or materials you have from the author or me or module, bring them out, we'll study digital audit. So guys, this is a very important and tough chapter. If there's a student from old syllabus, he'll know there was a chapter automated environment. It comes in every attempt, it's technical answer. You have to memorize it. Someone might think, I'll write the keyword or one word, but that is totally wrong. Content of module should be there. So match the heading guys. You can write the BCom material inside, but you have to match the heading. Let's start. First, so here I have written 6 to 12 marks, meaning we will see at least 1 or 2 questions. Plus there are also integrated MCQs or maybe short MCQs. It's a chapter about latest technology. What is the concept of auditing digitally? What are its advantages and challenges? So guys, basically digital audit is using technology to conduct an effective and efficient audit. Using advancements in technology to conduct effective, efficient audit. With rapidly growing IT environment, it's essential to adopt technology in auditing. So, it is a perfect time to digitize the way an audit is delivered through the automation and innovation. What are the advantages? A, B, C, D, E. A is improved audit quality. We did it manually. Now we use software so the errors will decrease. The impact of quality of audit is evident. Through automation data analysis techniques, we can do population audit instead of sample-based audit. Software will run everything. Now I say I have to extract errors like bills above 5,000. I will filter it and everything will appear. But previously, we used to check it manually. So now B is better transparency. B is better transparency in audit quality. Technological advancement increased transparency. It helps management to review the details like date on which any change is made, who made the change, and what has changed. All such details are captured and can be used while preparing the audit. A, audit quality. B, better transparency. C, it is lower cost. Automating process that were previously done manually. Technology can assist with auditing cost. Okay. Decrease human dependency. The audit quality, better transparency and the low cost. D is decrease human dependency. Now guys, previously we used to send 4 people to do the audit. But now due to software, auditing has become remote. A person can now do their work from home. And the technology helps in streaming the process of testing for auditors, which decreases the errors which occurs from the judgment of different individuals. Previously, it was time consuming. So guys, today's dependency on humans has decreased. Now E is efficiency. Because of automation tools, simple training and digital upskilling, we may see increased efficiency and even fewer errors. Increase efficiency and fewer errors. So audit quality, better transparency, lower cost, decreased human dependency, and increased efficiency. What are the challenges? First, reluctance to change. You must have many seniors who are from old generation who don't want to adapt. They still want to manually check everything. Challenges with data security and governance. Suppose you have a client's data and then your laptop gets virus, then the virus can be transferred. Okay guys? Some this are annoying to you, so you send Trojan to the other's PC. So look, things like this can happen a lot, right? Okay. Choosing right tool, automating the right process. This is also a challenge. Ensuring standardization and correct configuration to avoid error. For example, if the team uses older version, but you have new version, it will take time to update. Evaluating business benefits organization wants to achieve with automation. Management automation has been done to process. What benefit do they have? Errors decreasing or whatever it is. We need to understand it. Roadmap for digital strategy. So it takes so much time because somewhere it's power issue, somewhere it's Wi-Fi issue, so laptop won't work. For example, if you see on Zoom, there is a lot of audio issue and video issue due to poor connection. These are the challenges. So guys, since this is a new syllabus, so you may find topics like this, what are the advantages and what are the challenges, okay? It will be asked in detail. It will come in a form of story. Say you are auditing, then article wants to know about the challenges you might face. Or what are the benefits of digital? Answer is same, but it's a story. Okay. So what are the range of automated solutions? What are the range of automated solutions? Mr. IB. What is it? Mr. IB and M stands for macros and scripts, which is a rule-based automation within a specific application. An app has automated the process. For instance, let's say we need to ship something. We have a software that lets us ship. We can select 10 couriers. Earlier, we would go to the post office. They'll say it will take 3 days. Then we would go to DTDC. They'll demand this much money. Then we would go to Express Bs or DHL. Earlier, everything was complicated, but now it's at one place, macros and scripts. R is for robotic process automation. You might have seen repetitive acts in Discovery Channel. For example, in a bottling plant, earlier what will happen? Man used to close the lid and then wrap it with plastic. Now what is happening? Bottles will come through machine. Bottle cap will come from top and go forward. It will close automatically and move out. You must have seen. I saw the ketchup one. It was Kisan Company's plant. So you know the bottle is there. Ketchup filled, moved forward. Lid closed, it sealed automatically. Robotic process automation is done by robots. Okay. Business process automation, re-engineering existing business processes like workflows. Business process is automated. And I means intelligent process automation committing. Sorry guys. Combining RPA with artificial intelligence, which is ChatGPT. Technologies to identify patterns, learn over time, and optimize workflows, Mr. IB. M for macros and scripts are for robotic process automation, I for intelligent process automation, B for business process automation, once again macros and scripts. R stands for robotic process automation and I stands for intelligent business process automation. B for business process automation, Mr. IB. Now the answer here is, what are the factors for understanding automated environments? What will be the code? Copia. For the factors to understand automated environments, copia. Sir, what will you call it? The components of the IT infrastructure for each application. O. Organization structure and governance. P4. Procedures, policies and processes followed. Policies, procedures, process followed. I for IT. IT risks and controls. A stands for applications that are used by the company. Apps used by the company. What are the factors used to understand the automated environment? Copia. The components of IT infrastructure, organizational structure and governance, policies, procedures, processes followed, IT risks and controls, and applications that are used by the company. Then there is an example that used to be in the old syllabus. The example is, we'll use the same code, copia. Application KOT kitchen order ticket is what I'm using, used for restaurant and kitchen orders. I've written MS SQL in database. OS can be Windows or Linux. For network, it can be either in-house or outsourced, do whatever is needed. For server storage, HP servers and internal hard disk drives. If you get this in exam, what are factors used for understanding automated environment? Code is copia. Components of IT infrastructure, organization structure and governance, policies, procedures, processes followed, IT risks and controls, applications used by the company. KOT example is given. You'll have to write 4 marks answer like this. So, what are the key areas an auditor should understand about IT environment and its stages? So if you get what are the factors that will be considered, then it's copia. What are the key areas, important areas to understand the IT environment? Its code is FISTA. Following steps are to understand the IT environment. Understand, identify and assess. Understand the IT environment, identify the IT environment and assess the IT environment. Understand, identify, assess. The module has a version understand, identify and assess. The key consideration is FISTA. Understand the flow of transaction. The heading is important. Write whatever you need in it. Understand the flow of transactions. Example, if you go to McDonald's, you pay and they generate a bill for you. Then what do they do through that system? What they do? Have you guys seen there is a TV in McDonald's and Domino's? You can see the order there. Kitchen staff sees the order automatically. They have automated the flow of transaction. Or you can take the example of Zomato. You placed an order at the restaurant. You didn't call anyone, right? App has sent a notification to the restaurant. Restaurant has a system, it gets an alarm about the order. They will accept it. As soon as restaurant accepts the order and the order is ready, he will click ready. So the guy nearby, the delivery person will come and give the OTP. He will pick up, deliver it to your home and approve it. The end of transaction, flow of transaction. Similarly, the identification of manual and automated controls. For example, when you go to McDonald's, the cash collected there is a manual process. The bill is generated, then the order goes to the kitchen automatically. What is this? This is an automated process. Have you seen a vending machine? That is at airports. If I need a water bottle, I go to the shop, I pay and get a bottle. The person at the shop gave the bottle. What happens in an automatic vending machine? You put money into the machine on your own at the airport. Select the brand and the price you need, Bisleri or Kinley, 10 or 20 rupees bottle. It will come automatically. So how manual is that? It is completely automated. In a normal shop, some processes are automated and some are manual. Identify the manual and automated controls. S for identification of significant systems. What systems are they using? And identification of the technologies used. Then A for assessing the complexity of the IT environment. Assessing the complexity of the IT environment. First are the flow of transactions. Then I for identification of the manual and automated controls. S for significant systems. T for technologies used, and A for assessing the complexity of the IT environment. Once more. F for flow of transactions. I for identification of the manual and automated controls. S for significant systems. T for technologies used, and A for assessing the complexity of the IT environment is important. The code is FISTA. The heading is important. You can write anything in it. Okay. You have 5 minutes to read questions 1, 2, and 3 from the notes. Read 1, 2, 3. Guys, is it done? And now here, we are at question number 5. What is it? What are the risks to be considered while using the IT environment? So this is an old question. The code is Lucifer. What is the code? It's Lucifer. L stands for loss of data. If the data is lost, then the risk in IT, unauthorized access to data or direct data changes. You might have opened the tally of your office, haven't you? You must have seen your boss's password. You must have pulled some strings. Unauthorized changes to system or program. You have deleted the software itself. Inaccurate processing of data or processing inaccurate data or both. F stands for failure to make changes. Due to virus attack, changes cannot be made. Sometimes the system hangs or the keyboard is damaged, and E for excessive access, privilege access, or super users. So what's the code for this? Lucifer. Loss of data and unauthorized changes to the data. Unauthorized access to the data, unauthorized changes to the data, inaccurate processing of data, processing inaccurate data, or both. Failure to make changes in the system or the program. Excessive usage or privilege access, okay? Now let's see. What are the IT dependencies that are impacting the audit? Name them. IT dependencies, mention them here. Guys, identifying and documenting the entities. IT dependencies in a consistent and clear manner helps to identify the entity's reliance upon IT. Understand how IT is integrated into an entity's business model. Using Swiggy's example, this chapter will be simple. So Swiggy has a pretty simple model. What is used here? IT. Same for Uber, technology is used. Identify potential risk arising from the use of IT. Anything is possible, either virus attack or system hack. Identify the related IT general controls. IT general controls like providing OTPs is a general control related to IT. This enables us to develop an effective and efficient audit approach. Transparency in the number of orders came in, revenue made, the expense and GST collected. You'll be able to see everything and tally. Identify the entity's reliance on IT, how dependent it is. Swiggy and Zomato are completely dependent. You know, it happens that if you've used Swiggy, you might actually use the word wonky. Your system is actually wonky. The system hangs at times. Understand how IT is related. Identify potential risks arise from using IT and related IT general controls. That helps to use an effective and efficient approach. What are our IT dependencies? IT dependencies are created when IT is used to initiate, authorize, record, process, and report transactions for inclusion in the financial statements, FS. So we made a profit by this. We actually made a profit using IT. We calculated the profit by subtracting the cost from the sales. The GST working, the advance tax, and the income tax working has been built. Sir, the following are the 5 types of IT dependency. The code is SICAR. SICAR. All the Rajasthani people will be knowing SICAR. It's SICAR. S stands for security. Security including segregation of duties enabled by the IT environment to determine the separation of roles. Who is responsible for what? Interfaces refers to the kind of systems that you are using at work. Are you using a Windows or a Linux? Which one are you using, client-based approach or cloud-based approach? Calculations. Calculations are done only through software. GST calculation, depreciation calculation, automated controls, like you won't get delivery without an OTP. Nowadays, everything is automated. Earlier, we had complaints that the parcel is not received. The signature is missing or I can't find the pen. Nowadays, the parcel won't be delivered without OTP. It has automated controls. R for reports. Okay. Vendor master and customer aging reports, everything is system generated. What is the code of IT dependency? It is SICAR. S for security, I for interfaces. The calculations and the automatic controls are done. R for report is also completed. 4 to 5 marks question is done. What are the IT dependencies and how are these IT dependencies impacting the audit? The answer is of 4 or 5 marks. IT dependencies might be in MCQ. Now, the auditor must consider the IT dependencies relevant to the audit and evaluate the related risks. He should scope in ITGCs. What are ITGCs? Information Technology General Controls. I repeat, ITGCs are Information Technology General Controls. To test when there are IT dependencies identified in the system. This is IT dependency. From now on, we are stepping into everyone's favorite answer. The answer that can be linked to our lives, which is cyber risk. There are many risks in life like virus attacks, such as the virus attacks on the system, phone and laptop. It is quite risky. A cyber attack is an attempt to gain unauthorized access to a system or a network with the intent to cause damage, steal, expose, alter, disable, or destroy the complete data stored. For example, if we eat something dirty or unhealthy, we fall sick. What happens due to this? A virus enters or any infection has entered our body. Just like the body, the system gets infected. What do we call that? A cyber attack. The definition of a cyber attack is very important. This is the new syllabus. You should be good at definitions. What do we have? The first one's code is there is nothing. This answer will be quite long and in detail. There is an integrated MCQ in this. The institute made a great MCQ. We will understand how to identify, okay? Malware. Yes, it's malware. Malware or malicious software is a program or code created with intent to harm a computer network or server is called malware attack. It is a very common type of cyber attack. How many types are there? There are 4 types of malware attacks. Malware is a software like a virus which can be used for cyber attacks. The 4 types are ransomware, fileless malware, mobile malware, and trojans. Ransomware, when systems hacked and asks money. They hack the system. You must have seen it in movies. It's very common. It just pops. If you want to open the system, call me. Okay, there is an adversary in this ransomware. It encrypts the victim's data. Adversaries are the ones committing fraud. Offers to provide a decryption key in exchange of payment. It is sent via phishing emails. If the link is clicked, the system hangs and crashes. Ransomware. Ransomware demands ransom money. Hope you understood this. The mobile malware is a simple type of malware designed to target mobile devices with the use of unsecured Wi-Fi. So you can get into their mobile and make calls, get all their passwords. You might have seen it in a lot of movies. Fileless malware is a type of activity that uses native legitimate tools built into the system to execute a cyber attack. There is no firewall. It goes into system and attacks. Trojan. What did they do? They sent a Trojan. Let's say you're downloading notes or a video. The virus is inside that. It is installed through social engineering techniques such as phishing or with bait websites. It is a malware that appears to be legitimate software. It disguises itself as native operating system or like free downloads and sends Trojan with it. You downloaded a song and got virus. We're trying to identify and he demands money. The fileless malware attacks without a file. A Trojan came with the downloaded file. Mobile malware attacks the mobile. These are all types of malwares. Malware is actually a type of cyber attack. There are 4 types of malwares. Denial of service attack is preventing from doing something. Banking systems frequently experience downtime due to virus attacks, as exemplified by SBI, HDFC Bank, also virus attack on Ola cabs. Someone has hacked and taken away the data of Ola. Okay, so a denial of service is a malicious activity that floods the network with false requests in order to disrupt business operations. You see that business operation has stopped, which means denial of service. While most DOS attacks do not result in loss of data and are typically resolved without paying a ransom, they cost the organization time, money, and other resources to restore critical business operations. If my system is down for 2 to 4 hours, customers will move out in a denial of service attack. It disrupts my work. Then we have phishing. It is very common. Phishing is a cyber attack that uses email, phone, social media, SMS to entice a victim to share sensitive information like passwords. It happens nowadays. You have won the lottery. The phone rings. Rummy circle, rummy circle. You have won a lottery worth 2 crores. You have won. Beware of messages that ask you to click a link. They may lead to websites and send virus to your phone. Okay. First is spear phishing. It is a type of phishing attack that targets a specific individual or organization through malicious emails. Email sent to MD, CEO, CFO, you have won a lottery. You have won a lottery. As soon as you click, it will open another email and demand money. Then, whaling. It is a type of a social engineering attack specifically targeting senior or C-level executives with purpose of stealing money and gaining access to person's computer to execute cyber attack. They infiltrated the director's CEO's system. We call it whaling. So how do you catch a big fish? Whaling means catching a large whale. Leave small one. The CEO's system must contain some of personal files and videos. You will see these things in movies. What's it called? Honey trap. Honey trap is like sending sex workers to a politician's house. They invite you to hotel and then record videos. Smishing, it's where an SMS is sent. Wishing, through the voice message, they imitate the voices of your family members and contact you and ask for money. There are lots of fraud happening. What is wishing? Voice. SMS smishing. Whaling is catching big fish like senior executives. Spear phishing is done through mails. It's type of phishing. Spoofing. Creating duplicate email and websites. For example, suppose you have an HDFC bank account and they duplicate it. Now it's something like hdfcbnkk.com instead of hdfcbank.com. You didn't pay attention and went on it. You entered ID password and the other person withdrew money. Following are the techniques through which cyber criminals disguise themselves as a known or trusted source. One is domain spoofing, like I said, HDFC Bank. Other is email spoofing. Email spoof. For example, if a vendor is asking you to pay, okay, they spoofed email address of the person you were communicating with and sent you duplicate email. asking to please send the payment to this bank account. What do? You received an email. So you sent him the email and you also made the payment, but the email was spoof. A spoof means fraud email. Identity-based attacks. When valid user credentials have been compromised and adversary pretends to be that user. For example, like your boss, the CEO, CFO. Means after that they have the main system's access and then they hacked into your boss's email ID. Now the person who is committing fraud, they impersonate the boss and take all your details and you think it's the real boss. So that's called an identity-based attack. Insides threat. If an employee is unhappy or former employee wants to shake things up and they obviously poses danger to the organization because they have access to the company's network, sensitive data, or intellectual property, that would be a significant threat. Such cases are called an insider threat. Then, DNS tunneling. You asked someone to update the software and what did they do? They created a tunnel in the system. So what did he do? While transferring the files, he sent a virus or took some of your confidential papers and data files with himself. In DNS, a path was created. IoT-based attack. Internet of Things, they are common nowadays at home, like Google Assistant or Siri. Or if you have a washing machine that is run by a mobile phone, like from a start button or something. They're stealing data through it by attacking with virus because they're connected to Wi-Fi. They're IoT attacks. A washing machine, a refrigerator, and nowadays even the lights are controlled from mobile phone, right? Fan also. The entire network would compromise. IoT attack is cyber attack that targets Internet of Things devices or network. Once compromised, the hacker can assume control of devices, steal data or join infected devices group. Because your phone, your mom's and your dad's phone, music device and TV. Fans, lights, washing machines are all controlled by mobile phones. These are different. Cyber attacks. Read question number 7 and 8. No, 6, 7. IT dependencies. Sorry, risk. Read 5, 6, 7 slowly and comfortably. 7 minutes time. It's done? Okay, so Desikar answer is important. You must always remember that. Okay, then cyber risk. What types of cyber risk are there? Malware, denial of service, and phishing. Spoofing is there. IoT attacks and identity-based attack is also there. Then insider threats. And another one is DNS. There are total 8, okay? Let's go and move on to what are the stages of cyber risk. So following are the stages. First, the code is AIM. First, assessing the cyber risk. What is it? Assessing the cyber risk. No organization is immune to cyber risk. First, we learn the types of cyber attacks, then what are the stages involved. No organization is immune to cyber risk. Following are the common threats. It could be ransomware. Common criminals are using email phishing and hacking for fraud and theft. Insider committing malicious and accidental activities, as we read previously. We read ransomware. Then we read phishing. Then we also read about identity-based attacks conducted by people within the company. Now, the impact of cyber risk is marked important because it is a separate question from the TYU, assessing cyber risk and impact of cyber risk. Impact of cyber risk can vary from organization to organization. Some of the indicative areas are fur bird. So what would you say? Fur bird or bird fur? First, fines and penalties may be imposed. Incident response cost, which could be for investigations and for remediations. So now, you'll have to respond to agency, bank officials, or even income tax officials. Anyone can come. There may be regulatory costs, data breach and privacy, intellectual property theft, someone stole your logo. So they can demand ransomware. Database reputation loss and litigation can happen. So what is the impact of cyber attack? First is assessing the cyber risk. Impact of cyber risk, fir bird, fines and penalties, incident response costs, regulatory costs, breach of privacy, intellectual property theft and ransomware. Database and reputational loss and litigation. Then after that comes managing the cyber risk. Here are the steps to manage the risk. Okay. Gain a holistic understanding of cyber risks, threats facing their organization and other financial institutions. Then, assess the existing cybersecurity. What happens here, how the company prevents the cyber fraud. Okay? Against regulatory requirements. Align cybersecurity and IT transformation. Initiatives with strategic objectives if the company's goals and the company's existing cybersecurity aligns together or not. Understand accepted risks. You see the number can never be 0, right? You have to accept it and document the compensating controls. Gain holistic understanding of cyber risk. Okay, so 2. Number 2. Assess existing cybersecurity program and capabilities against regulatory framework. Align cybersecurity and IT transformation initiatives with strategic objectives. Understand accepted risk and document compensating control. So AIM. Assess the cyber risk, impact of the cyber risk and manage the cyber risk. So this is your stages of cyber risk. I'll explain CSF. Cyber security framework. CSF means you will say cyber security framework. Now there is a risk. So we need to establish a framework which will help reduce our risk, although risk cannot be reduced to 0. In the worst case scenario, our system shouldn't shut down. It should be able to respond. Can't reduce to 0. It includes how management identifies and protect the risk and safeguard assets. Okay? And the management's preparedness to detect the attacks and their responsiveness to adverse events. First, identify risk. I just took an example of COVID symptoms. Heading is important, then write whatever. Identify the risk. See where is risk coming from, how much is the risk and how is it occurring. How long did COVID symptoms last? 2. Protect the risk. What did we do? Isolation. The risk has happened now, so what did we do to stop it? Shut down the system. What to do when fire breaks out? Yes? Turn off main switches. Protect from risk. If someone has COVID, they must be isolated. Now check. Detect the risk. How did it occur? How did it happen? Because you went out to eat somewhere, or you met people, or you went to the hospital. Okay? Then respond to the risk. Okay? The medicine is given. Then follow up with the doctor and recover from the risk. If there's question about how cybersecurity framework is built, then identify risk. We've seen risk. You must protect yourself from the risk. Then also detect how did that happen. Then you have to respond to risk. So they gave us some medicine and then we recovered from the risk. Write whatever you want after writing down the headings. 4-5 marks answer is easy to make. If it's descriptive, then you have to be very clear. Write COVID story in cybersecurity framework. And in stages of cyber risk question, the answer is AIM. Assess Impact and managing question is important. And in types of cybersecurity attacks question, the answer is those 8 points. It will not be a big answer question. It might be a small answer question or MCQ. Yes, the stages question might come in exam. Okay. So read question 8. There's no 9. It's wrong numbering. 8 and 9. Since 9 is missing, so 8 and 10. Read it. Okay. Done? Okay. Let's move on to question number 11. Now question 11 is, what are the control consideration around vendor setup and modification? Students, what are the control consideration for vendor setup and modification? Okay, now, controls around vendor setup and modifications. So these are the 3 points. First is vendor setup, then it is electronic transfer of funds, and then patch management. 3 out of 1 will definitely come in exam. Vendor management seems to have a higher chance because it's logical. So there is company. And when these large corporations and companies hire a vendor, a separate account is created for them. Their complete KYC is done. That's vendor account. People who worked on SAP knows about it. What are controls for that? Who is responsible for making changes to the vendor master data? Is process centralized or decentralized? Okay then. Are other communication channels such as email used to request changes to vendor master data? If yes, consider if multi-factor authentication is enabled for email. If one person requests to change vendor, it won't work. It needs 3 people in hierarchy to change vendor or appoint someone as new vendor. What systems and technologies are used to initiate, authorize, and process requests related to changes to vendor master data? Are authentication protocols defined to verify modifications to vendor master data, such as collateral? What is process involving multi-factor authentication? So the answer is for 4.4 marks, okay? Who is responsible for making changes? Is the process centralized or decentralized? The other point is, are other communication channels such as email are used to request changes to vendor master request? What systems and technologies are used to initiate, authorize, and process requests related to vendor master data? Are authentication protocols defined to verify modifications to vendor master data? 4 points are there. Clear? So this is vendor's part. Now, what are the controls around electronic funds transfer? Okay, students. Currently, when a payment is being made by company and the vendor has been created, large companies typically have different people doing the payments. So a master file is uploaded with help of an OTP. Is that clear to everyone? So payment will be done with OTP. For example, company has 1000 employees. When you make payment, you add beneficiary. So OTP is required for payments. But in a large company, adding each OTP individually would take a lot of time. So they upload master file. But what if someone edited that file? So this says, are personnel responsible for wire transfers educated on relevant threats and information related to phishing scams associated with fraudulent request for wire transfer? Have you educated them about receiving payment requests? Will they get an email if a payment request comes? Will they verify the email? Will there be a double authentication process? Did you educate them or train them? Authentication protocols are defined to verify wire transfer requests like callback to confirm transaction or dual authentication with 2 OTPs, separate for each individual, so that scam can be avoided. What systems and technologies are used to facilitate request initiation, authorization, and release of wire transfers? Which technology is used? Both these 2 points were used from the vendor setup. Can you all recall? The technological point is used here and protocol 1 also. Now patch management. When a system is hacked or attacked by a virus, how do you restore the system? So process used to fix is what we call patch management. Does the entity have a patch management program? Does the entity run periodic vulnerability scans to identify missing and unapplied patches? For example, if there is a virus attack or if someone is hacking a system, does the entity have antivirus software? Has the entity been notified about patches by external vendors such as Microsoft for Windows patches? Windows updates keep coming. If your Windows is connected to Wi-Fi automatically, it will keep updating itself automatically. Windows can tell you how many types of threats are on your system. You may have downloaded something with virus. So patch management has 3 points. Each question can have 3 marks or 2 marks, and any answer can be of 3 or 4 marks. Read 11, 12, 13. Clear? Now, question number 14. What does it say? Explain remote audit, its advantages and disadvantages. Remote audit means auditing from home, like work from home. It is simple and new concept. The remote audit or virtual audit is when the auditor uses the online or electronic means to conduct audit. It could be partially virtual or completely virtual. Employees could work from home or go to the office to work. Okay, students? The auditor uses technology to obtain the audit evidence or to perform documentation review with auditor's participation. Even while sitting at home, they tell you send the file with mail or give the team access to any desk. Advantages, disadvantages. It is cost and time effective, no travel time and travel cost involved. Comfort and flexibility to audit team as they will be working from home environment. Time required to gather evidence can spread over several weeks instead of concentrated into small period. This is flexible due to these reasons and the time limitation due to work settings. Auditor can get first-hand evidence directly from IT system as direct access may be provided. Now, widen selection of auditors from a global network of experts. For example, CA firm in Mumbai can hire anyone from Delhi, Kolkata, the US, Dubai. All this saves so much time and makes work easy. What are disadvantages? Network issues. Students, is it audible? Mouse is not working due to issues. Tally and Excel are lagging. So now first point of disadvantages is time zones issues. Could also affect efficiency of remote audit session. This came as MCQ, the opportunity to present doctored documents and to omit. Relevant information is increasing. Doctored means tailored. Documents. A document can be edited as its copy is requested. So it can be edited. So the opportunity to present edited documents and to omit relevant information has increased. Is that okay, students? Moving on. Now see, remote access to sensitive IT systems may not be allowed. Like, you will not have full access to SAP. Okay, you won't check the main server, the main PC. Security aspects related to remote access and privacy need to be assessed. Cultural challenges to auditors such as language barrier. Lack of knowledge for local laws and regulations could impact the audit. This is disadvantage. Audit procedures like physical verification of assets and stock taking cannot be performed. So you cannot verify. These are advantages and disadvantages. Then, next question is, what are the emerging technologies? In the audit, explain data analytics techniques along with examples of such techniques. Look over here, okay? Generating and preparing meaningful information from raw data. Generating and preparing meaningful information from raw data using tools and techniques is data analytics. The tools used in data analytics are called CART, which means Computer Assisted Audit Techniques, Audit Analytics or Audit Data Analytics. It involves analyzing large sets of data to find actionable insights, trends, and draw conclusions. It helps to discover and analyze patterns. The other advantage is identifying abnormalities and extract other useful information in data. These are the tools which has to be learned. You have to learn these all because either of this can come in the exam because they were in PYQs. So the ACL audit command language and Alteryx, which is a popular tool, Power BI and Caseware. A total 4 are there, okay? Which ones? ACL, Alteryx, Power BI and Caseware. So definitions of these can definitely come in the exams. Students learn and keep in mind the definition of data analytics. And the techniques are called CART. And what are the tools we can use? We can use ACL, Alteryx, Power BI and Caseware. This is the direct definition which has to be learned, okay? Emerging technology have to be learned. Remote auditing and emerging technologies are new concepts. Next, give 3 examples of automated tools which is used as part of emerging technologies, along with risks and audit considerations associated with it. Now there are examples of automation, robotic process automation, blockchain, machine learning and AI. Now it is given in the module itself. Look carefully. For example, IoT is given, Internet of Things is given. AI and blockchain are also given. Let's see these now. IoT is the concept of connecting any device such as cell phones, washing machines, refrigerators, or any machine. Any system like Siri or Google Assistant, a coffee machine, a washing machine, or any machine are connected to the internet. What are its components? What are its advantages and disadvantages? Data collection, analytics, connectivity, people, and process. IoT not only changes business model but also affects strategic objectives of organization. It changes with exposure to new laws and regulations. There will be a privacy issue somewhere. For example, IoT is not allowed for army families or families of Navy personnel also. Because of risk, AI means artificial intelligence. Refer to a system or machine that can think and learn It is machine mind instead of human mind. Like ChatGPT. AI systems utilize data analysis and algorithms to make decisions based on predictive methods. Let's suppose you go out every morning at 11 a.m. Is that right? Or you get up at 10 a.m. every day. So after a few days with this same routine, Siri will notify you to get up at either 10 or 11 a.m. because it is AI. So it will perform tasks on pattern. Okay, students, let's assume I update my routine on the app daily. I have been walking X number of steps. I ate this food. I entered amount of protein, carbs, vitamins which I eat in a day. All this data have been entered by me on my phone. Okay? Then it will tell itself, show the pattern of your routine, what you should eat next. An example for girls. No offense to anyone, students. For example, if a girl is using some app to track their period on regular basis, so you entered your data about when it started and when the cycle ended, and if there were some issues or not. Understood, students? So it will automatically tell you about next due dates of your period with help of AI. AI doesn't know unless you input the data, and then it predicted predictable patterns. Now what will be risk? Complex algorithms are developed to propose decisions based on pattern or behavior learned over time. Let's suppose if you are not following a routine and not updating regularly, so the AI cannot predict things due to this inconsistency. One day you had junk food. Okay, students, you ate big platter of junk food, so that data cannot be entered. Or you ate idli. The system will never be able to process. So its complex algorithms is one issue. Blockchain cryptocurrency. It is based on a decentralized and distributed ledger that is secured through encryption. Each transaction is validated by blockchain participant who creates blockchain information that is replicated and distributed to all participants. All blocks are sequential so that any modification or deletion of block disqualifies information. This is blockchain. They are discussing 3 systems explaining advantages and disadvantages. This can come in exam. Now topic is non-fungible tokens. What are non-fungible tokens? These are NFTs like paintings and artistic works. Is that okay? NFT means something unique and cannot be replaced. NFTs are digital assets, for example, photos, videos, artwork, sports collectives, etc. I will give you an example. Let's suppose I have my own NFT with me. Do you understand, students? This is my NFT. No one can take it from me. It represents ownership and is created using blockchain technology. It is a digital asset. It is secured by the blockchain and can have only one owner at a time. Then it is transferable. There are many apps and websites where you can trade this. Digital NFT is digital asset that represents internet collectibles such as art, music, or games with authentic certificate created by blockchain technology. It's unique. It cannot be forged or manipulated. NFT exchanges take place with cryptocurrencies like Bitcoin on special sites. You can sell and buy or exchange these NFTs on special websites that uses blockchain technology. Then, challenges. NFTs has its own challenges because it is not recognized. What if we trade the NFT but we do not get anything profitable? We get loss, market is not wide, online fraud are there. NFT audit considerations include a comprehensive code review for verifying the safety of tokens, valid contract, data privacy, and potential cyber threats. These are the challenges of NFTs. Is that okay? These are audit considerations for non-fungible tokens. Then, question number 18. What are some examples of technology risks of digital systems and control considerations to consider while assessing technology risk? Is that clear, students? So if examples of risk come up, you would do Lucifer. The main consideration is to understand the risk and how to overcome it. This is the answer that you will have to memorize directly from here. Clear? So you have to learn this question. 19. Now give examples of technologies for next generation audit along with the risks associated with it. Students, please refer to question 10 in question book on page 205. Okay, students? Okay, refer to the question bank. Clear? Okay. For example, drone technology, augmented reality. You will see the real world environment in virtual reality. So the games in Imagica are a perfect example of augmented reality. For example, you sit in front of the screen which are 6D, 7D, 8D and so on. Everything feels real and gives a wonderful experience. All that is a clear and perfect example of augmented reality. Virtual reality is VR, which is popular, and its common associated risk. This is next generation auditor using all of these new technologies. Okay, do this answer directly from question bank. So those who have the module, you will find this as the last question. Is that clear to everyone, students? Clear? Okay, now refer integrated MCQs because they are really crucial, and I uploaded them to YouTube, and refer to test 3 from the book. Clear? This is a very important chapter, my students. There are 19 questions and at least 2 will be asked in exam. This is what will come in exams, you see. I have already framed answers in format of 6, 5, 4, 3 and 2 marks. So students, I don't know what will come in exam or how it will be, but we are preparing you for worst and best. So I hope you understood that. Keep recalling this again and again. Listen to the audio. Turn off the video and listen to the audio. Download it. Learn all the topics by heart, but make sure you clear this time, okay? Let's aim for rank of 70 or higher, whichever comes first. Bye guys, take care. Bye. So hi guys, welcome back to the class. We had already completed the entire syllabus once and the only thing left is review part, right students? So in SRI we have 2 series, 2400 and 2410. This chapter is almost 19 pages in my book. I mean handwritten notes, the same ones you have to download from the website. They are uploaded on www.letslearnindia.in. Okay. So students, the last amended chapter is very interesting and very easy to learn. So 800 series has been added to the essay. Okay. SRS and SEE has been added. SQC1 was already present, but there have been some changes in the content. Then digital audit and ESG was added. Is that clear to all? And the last chapter is SRU. 2400, 2410. Okay. It is very easy and very scoring. In the earlier times, 2400 used to carry more weightage. Okay. So there are 7 topics, including SQC1. If you include quality control also, there will be a digital audit, an ESG, an SRE, and an SAE. The SRS and 800 series is done, and then comes the SQC1 and SA220. Okay. Okay, now here it is, SRE 2400 and SRE 2410, and these talk about the review. So standards on review engagement. What? Standards on review engagement. Just a second. What were we talking about? SAE. And that was audit. But what is this? SRE, standards on review engagement. Let's play KBC, someone wrote. Wow, sister, nice. Nice, let's do it. So let's see how much you guys know ethics. Due diligence was not done. So what clause comes in grossly negligent? Clause part schedule. Due diligence, gross negligence. 712, very good. 712. So I am a director. All right. So I am practicing CA as director in a company. Practicing CA director in a company. Practicing CA director. Yes, it is allowed, I know, but tell me the clause. 1111. Okay, 1111. All right, let us say, if I tell you to stat audit. So according to the ethics, how many stat audit do we have? So we have 30. And what's the tax audit of 44 AB do we have? We have 60. Okay. And so I had 3 partners and I alone have signed 180 tax audit. Now is it okay or not? Yes, it is okay. No problem there. What is clause number 18 for Caro? What's clause 18 for Caro? Designation. Yes, very good. Where is Nidhi Company written? Nidhi Company is under which clause in Caro? Number 12. Very good. In the NBFC chapter, tell me that what should my net worth be? Net worth. How much net worth be in NBFC chapter? Devesh says, sir, it is in the book. It's okay, Devesh. Minimum is 10 crores rupees, minimum 10 crores. In PSC audit, if I ask you about performance audit, what would you write? What are the elements of performance audit? E. Economy, efficiency, and effectiveness. Yes, very good. Now, when I talk about of the special purpose framework, I want to audit FS. In the special purpose framework, FS has been formed and I have to audit. Which essay will be used? SA 800, SA 800. Okay, so whatever new things that have come now, if we know their contents of report, then tell me what are the elements of that, of contents of report. Third point is common title, address, year, date, place, sign, UD in FRN. In between are management's responsibilities, practicing auditor's responsibilities. And also this engagement has been performed according to relevant standards. Okay. Now in all the standards that we are having, anyone can do it except for one. And in that only the stat auditor will do. 810 summary FS. Pay close attention, 810 summary FS. Let's say my full FS, either it is adverse or disclaimer. I just taught it in the regular batch that if my full FS is adverse or say it is disclaimer, then can my single FS be clean? Inappropriate form opinion? I'm talking about the single FS. I'm not talking about the summary. Listen to question first. Okay. Now listen closely. So my full FS, adverse or disclaimer. So I need to provide specific AI as clean, right? Can I give you clean? Yes, I can. It got 3 conditions. What was the first condition? Not prohibited by law and regulation, not published together, and not a major component of the, so not a major component, right? Note, not a major component of entity, full FS. Now, do you remember? It is good that you remember. At least some things. It's good. I hope your confidence has increased a little bit. It increased? So keep going, guys. Okay? Okay, come on now. So what does it say? Engagement to review. Okay, wait. It is draining repeatedly. Okay, leave it. Tell me quickly, you guys. Hi, sir. Naresh Sharma here. Hi, Naresh. How are you? Okay. Yes, we are going to start soon. Just wait a minute. The iPad is charging right now. Pencil is charging. Yes, till then tell me. Agreed upon procedure. So now, what is the standard number for the agreed upon procedure? Tell me. What is it, students? 4400. AUP is 4400. Okay. SRS 4400. Okay. So now types of types of red flags. FABO, financial accounting, behavioral, operational. It's financial accounting, behavioral, operational. So it's financial accounting, behavioral, operational. Yes, very good. Okay, then what else did we read? 143.12, fraud reporting. When should be done to the CJ and on what amount? Minimum at 1 CR and 60 days. The minimum is 1 CR and 60 days. Give me 5 types of threats to a professional accountant. 5 types of threats to a professional accountant. It's IRAFI. Interest, review, advocacy, familiarity, and intimidation. Okay, so tell me, what is the SA number for compliance of laws and regulations? Naresh, this was in the ethics. What is SA number for compliance of laws and regulations? It's 250. 250. Okay then. Now in the written representation, if I have any doubts about the DICE, diligence, integrity, competence, and ethics about management. As an auditor, what opinion will I give? As an auditor, the opinion will be, you do the disclaimer. Yes, disclaimer. I am saying disclaimer. You remember disclaimer, right? Okay, now look. Engagements to review historical financial statements. So we are not told to audit here. We were told to review them. Now, management has created. Try to understand here. Management creates it, then management gives to auditor. So between preparing and giving means between management preparing and giving to auditor, there's a phase. Management has prepared it. They prepared it as per their wish. It is right or wrong. When someone will check, only then it will be submitted to auditor, right? Otherwise, auditor will consider us inefficient accountants. He might judge. So what to do? Let's call a CA. No, not the auditor, but let's call CA and ask him to check whether it's prepared correct. Okay? So a review is a limited assurance engagement, right? 1 second. So what kind of assurance is audit? What kind of assurance is audit? Yes, it is absolute. It is investigation. 1 second. No, wait. Just wait. So here absolute is your investigation. And which one is reasonable one? Audit. Audit? Who wrote this? Ambu. Audit is the reasonable assurance. Now, what is review? Review is a limited assurance engagement. It's a level of assurance where engagement risk is reduced to an acceptable level where the risk exceeds reasonable assurance to provide a basis for a conclusion, for expressing a conclusion. It means if management has created it, whether management has created it accurately or not, someone has to justify it. In reasonable, you saw it was correct. So auditor see the reasonable. So the auditor watches reasonable. So below absolute there is limited, and then below limited there is reasonable. Auditor will take reasonable. Investigation will always be absolute. Management wants a CA to review it. Someone might doubt if the management has created correct or not. It is limitedly right but not reasonable. I won't say 100% right but right. So case between both is what? It is limited assurance engagement. Okay? So basically it involves fewer procedures and gather evidence that's high, on the basis of which limited conclusions can be drawn. Therefore, a review is related to financial statements prepared on the basis of historical information, just like an audit. Now you tell me, will there be an audit first or review? First will be review. First management prepares it, so preparation done, and then it is reviewed. Then what happens? It is audited. Management has prepared and will give it to a CA. Please just check if it is done properly. So what will that CA do? He will review whether or not this is prepared according to the acceptable FRF. So the assurance level will be a bit higher, but it won't be 100%. Now do you remember what do we call this higher assurance level in English? What do we call higher assurance in English? Limited assurance. What is it? Limited assurance? Yes, Naresh, 100% absolutely. We can't do that ever. It will only be an investigation. Okay? So what are the objectives of this SRE 2400? What is its name? Engagement to review historical financial statements, similar to an audit of historical financial information. Review of historical financial information's objective is to obtain limited assurance by making, we have two processes here, and these are inquiry and AP. One is inquiry and other is AP. To obtain limited assurance by making inquiry and AP about whether FS is free from MMS, whether what? FS is free from the MMS. But tell me, who created FS? Management. Report on the FS as a whole and communicate as per required by SRE 2400. It can be done by any practitioner. Understood? Anyone can do it with just one exception, 810, where it says stat auditor should be there. Okay, in cases where limited assurance cannot be obtained. You might say, no sir, we are not getting what you said. So so tell me, if I have accepted the engagement, then what options do I have? I would include a disclaimer in my report. Or if I feel I should not give a disclaimer, then I will withdraw if possible, and this is common throughout. If you have a report, you can give a disclaimer. If that is not possible, then withdraw. It is also a common practice. So question number 2 is just for understanding. It's not very useful. It's not at a final level. Yes. For review, this line here, all this will be useful for MCQs. 1 and 2 are not a descriptive question. It's only to skim through chapter. An audit is always a reasonable assurance. It is always a reasonable assurance. Above that is limited assurance. So what do we do there? We do the review there. Now both of these are of historical. Both are of what? Of historical. Okay, tell me SAE is of what? Like these are of the historical FS. So same way, what are SAE of? Like there is an engagement, means a relationship. Prospective. Prospective SAE standards on assurance engagement. These are on prospective PFFI and PFI. Remember this in prospective? These two are of historical and SAE are of the PFI, of the prospective. Okay? Now first question has arrived. Factors affecting acceptance and continuation of client relationships and review engagements are: before acceptance, what is it? Unless required by law or regulation, practitioner shall not accept a review engagement if he is satisfied that there is, unless the practitioner decides that there is a rational purpose for the engagement. Now, is there a way to do this? I mean, is it management's responsibility? In FRF, in law, it is written they are supposed to prepare it because they are unable to. So I'll go there and review. Okay. And that a review engagement would be appropriate in the circumstances. If they say, give your opinion also on this, whether it's right, then sir, 1 second. I'm not an auditor. He's the one who will give you opinion. I will just say this has been made right. Okay. If they ask for an opinion as well, then you can say the practitioner may recommend other engagement like audit or compilation as appropriate. They didn't make depreciation entry. They'll say, sir, you pointed out, so can you also make the entry? Okay, I did it. Sir, we don't understand the concept of prepaid and outstanding. We are BCom graduates. We don't know direct entry. Can you do it? Okay. We don't know depreciation working. Can you do it? But 1 second, I'm making everything here. Engagements are given to us just for the review. They said, sir, this thing is missing. Can you make it? Again, one more thing is missing, and they again told me to make it. They are like, depreciation working is missing. Please make it. If you are asking me to make it, then this doesn't seem like a review. It's like I am making accounts. Okay, now if a practitioner makes the accounts, what standards would be applied? SRS 4410 will be applied, compilation engagement. So it says that the practitioner shall not accept review engagement unless he is satisfied there's a rational purpose and the review would be appropriate. If he'll think this review rather need audit, then he will recommend audit. He'll say this won't be a review if I will be making it, so he will suggest compilation engagement. Okay? Next, practitioner has reason to believe relevant ethical requirements including independence won't be satisfied. If it's positive and if they are satisfied, then it should be accepted. The practitioner's preliminary understanding of engagement circumstances indicate that the information needed to perform a review engagement is likely to be unavailable or unreliable. This means I won't get data or I'm receiving incorrect data. So I won't accept it. So positively, if I get the data and if it is reliable, then I will accept it. Okay, now the practitioner have doubts about the management's integrity. If I have a doubt about integrity, I won't accept it. But if I feel it's correct, I would. Then I would accept, or if management or TCWG has imposed a limitation on the scope of practitioner's work. So what will happen? It will result in a disclaimer and therefore I will not accept it. So I am saying generally you should accept, but when would you not accept? The first statement is positive, the practitioner is satisfied by the rational purpose. Or a review would be appropriate. If instead of a review it appears audit, then recommend an audit. If instead of a review it appears compilation, then recommend that. All these BCD statements are negative. Now he feels that independence won't be met. He feels that the data will be unavailable or that data will be unreliable, and he is doubting about integrity. Integrity is under doubt, or management or TCWG may impose limitations, so he will not accept it. Okay? What are the factors affecting the acceptance and continuance of client relationships and review engagements? Acceptance means fresh engagement. Continuance means old engagement. Question number 4 important. What are the preconditions for accepting a review engagement? Yes, in BCD it will not do continuance. It will not. Now is this similar to 210 or not? So the first thing is to see whether the FRF is correct or not. So acceptability of FRF applied of preparation FS. B. Agreement of management is acknowledging and understanding its responsibility for preparing of FS and internal controls. First thing is you have prepared the FS under FRF. Number 2, you have made the management. You have created it, so acknowledge it. You also have internal controls. Third, you will provide access to all the information. Number 2, you will provide additional information to practitioner and unrestricted access to the person within the entity so that I can get information. This same thing is written in SA 210. Then, if above 1, 2, 3 are not present, practitioner shall discuss same with TCWG and request for changes. They say they won't make changes, so what do? What do we say in 210? Okay, then you go on your own way and I go mine. Practitioner should not accept engagement unless required by law or regulation. Okay? If law says you to accept it. 3 conditions that I had were not present, but law required me to accept, so I did. Now listen carefully. If we accept such an engagement, then it does not comply with the requirements of SRE 2400. Then such engagement does not meet requirements of SRE 2400. Okay, 1 second. We read this line somewhere else also. If they are not complying, when you write report, okay? So in that report, we say this engagement is performed as per the SRE. So then can we write this line? No, we cannot. So then the practitioner shall not include any reference within the practitioner's report to the review which has been conducted as per this SRE. Generally, you should not accept, but if law says to accept it, there is no problem. Okay, you did it. So you did it. So this engagement that you have accepted is not as per SRE. Remember, when you create report, this point should not be included. This is for practical life, not relevant to exam. Okay, for your understanding. So you will read 1, 2, 3, 4. Okay, 1, 2, 3 and 4. Question 3 is important, preconditions. So those 3 points we have: before, during and after. After is reporting, procedure is of during, and this is before. So common points in all standards. Okay, let's start. Reading. And let's see who went to school. Let's start reading. Any doubts? Question number 3, a point again. Are you done reading?
Oops.
Okay. Yes, I get it. You have a doubt in question number 3. Are you all done reading? A of question number 3. There is a little error of typo and language in this. He shouldn't accept the engagement if it is negative. So this is matching if he has a reason to believe that he will not be satisfied. Okay, so this is correct. Just put not in this point. Okay, the practitioner is not satisfied. That rational purpose for engagement or review engagement would be appropriate in circumstances. Just add a not. Told you it's just language error. This is said positively, rest all are said negatively. Veronica, I think you had a doubt, right? Second line in question 1. Just a minute, second line in question 1. Yes. The management has prepared it. Okay, the management has prepared it correctly. They believe it is correct, but they will submit it to the auditor. When they submit to the auditor, someone has to verify whether it is correct or incorrect. I can't get an audit done because if I do, it will be the auditor task. So someone has to tell whether my work is correct or not. Okay. I can't export this from here. Put it in note. Keep in mind. Note it. So what we do, we get a limited assurance, a review. Review is called limited assurance that the things are correct according to the management. It's not 100% correct. I'm not saying absolute. It's more than reasonable. We call it limit assurance because the auditor will blame you that you didn't do it properly. So what can we do? We can reduce the risk. In normal audit, we conduct audit, but in review, we see whether management's work is appropriate or not. Practitioner can be anyone, but the auditors are appointed by the members. They are the reviewers, no auditors. Anyone can review it. For example, you wrote a test paper and you showed it to your dad, to your mom, to your brother, or to your sister. Okay, so your family has checked everything, right? So what is it? It's a review. Now you send that test paper to me. I check it carefully to see if it's correct. So what will it be? Reasonable assurance, it will be audit. Ideally, internal staff should prepare and review it. If they cannot do so, we can ask someone else to do it. They will check and tell, you have done it right. So someone might say giving assurance. Which assurance? Limited assurance. Clear? Question number 5. Top assurance is absolute, then limited, and then reasonable. It's perfect. Procedures for performing the review engagement. The procedure for performing this is during step 1. What do we need to check? Materiality in the review of FS. Now look, this is a very long and detailed answer. Look here, 1, 2, 3, 4, 5. Yes, still here. Again, it's very rare to see such big steps in exam. Look now. What does it say? Procedure for performing the review engagement. First we will find materiality. Here he means practitioner shall determine the materiality for the FS as a whole and apply the same in designing the procedure. How to check, what will we find materiality? As the work progresses, if he feels something is wrong, he can revise the materiality. So whatever is there about 320, it is used here. He shall revise materiality for FS as whole in case if he becomes aware of any information during his review that has caused the practitioner to determine a different amount initially. He can also revise. Now step 2, obtaining understanding of the entity. It's given very long in module. I wrote only 2 lines. He will understand management. He shall obtain an understanding of entity and its environment and applicable AFRF to identify the areas where what can happen. MMS can come. Because of it, he can design the procedure, obtaining the understanding of the entity. Third, here he will design and perform procedures. Should I do compliance or substantive? Remember whether to do TOC or TOD. When we talk about a review, what it has, it involves 2 procedures. In obtaining psi as the basis of the conclusion, on the FS as a whole, the practitioner shall design and perform what? Inquiry and AP, what will he do? Inquiry and analytical procedures. It means to address all the material items in the FS, including disclosures, to focus on addressing the areas in the FS where misstatements are likely to arise. Focus on addressing the areas in the FS where misstatements are likely to arise. Look, we think that whatever mess there is, we will take a look at it. If there is any important matter, we should address it properly. What will he do? He will design and perform the inquiry and AP. There are two procedures, inquiry and AP. Do you remember ORE ICAI? Tell me. It's ORE ICAI. Observation, reperformance, inspection, computation, analytical review, inquiry. Do you remember? Now here in the SRE, what is being used here? Inquiry is being used. And analytical process is used. Okay. Now, in particular, the practitioner may perform inquiries and AP for review engagement. Where will it be done? I have written read A inquiry and B AP, where it's used in told directly in examples. And read why inquiry or AP is important. This is an exams question, that's why it's written like this. You need to understand that when we are conducting an SRE, we use two processes, inquiry and AP. Where should we do inquiry or AP? I am showing you the examples for this. And why inquiry AP is important, you should write it in your notes like that. Just read it from the modules. It will be in the book too, right? Page 270. Here it is. Now don't ask such childish questions that what does inquiry mean? Inquiry refers to seeking information from management and other individuals within the entity. Hello, how are you? Where did this come from? How was this found? How do you find out this? You can ask them. Okay, should it be oral or written? Both will work, preferably in written. Okay. What can we ask? See, examples are given here. The inquiry may include matters such as about the accounting estimates, about the related party, complex unusual transactions, the existence of or suspicion of any fraud, events occurring between the date of the financial means, subsequent events, management's going concern. Basically, it includes all essays, 540, 550, 560, 570. Okay. Then contractual obligations and contingencies. These are examples. The practitioner may also obtain extend inquiries to obtain non-financial data. Hello, can you hear me? Am I audible? Someone is saying no audio. Dear, your internet must be down. Just log out and log in again. That's right. So you are making inquiries for what? Inquires for everything, like there are essays 540, 550, 560, 570. Look, 540 is estimates, 550 is related parties, 560 subsequent events, 570 going concern. Okay, if you want, you can also inquire about the non-financial data. Okay, then what else can we do? We can do actions taken at the meeting of the owners. Then communication the entity has received or expects to receive from a regulatory agency. And matters arising in the course of applying other audit procedures, just simply read it. Then what will be AP? In designing AP, practitioners shall consider whether data from which entity's accounting system and records are adequate for purpose of performing AP. If you recall, we have the answer for AP. Remember that? Suitability of SAP and reliability of information. And developing an expectations and using analytical procedures. Sorry, acceptable difference. A is acceptable difference. Do you remember? The auditor should consider whether the data from the entity's accounting system and accounting records are adequate for perform AP. Okay, in SREA they say the practitioner mainly focuses on inquiry and AP for obtaining PSI to form the basis for the conclusion on the FS as a whole. ORE ICAI is used in audit, whereas in review only inquiry and AP is used. Then this module has a question that why inquiry and AP are important in a review. Inquiry and AP are important in review. Okay, let's see what he says. Evidence obtained through inquiry is often the principal source of evidence about the entity, about the management's intent. What do they wish for? Now, to support the management's desire However, information available to support management's intent may be limited. In that case, we need to look at the past history of the management. Okay, management stated reason for choosing a particular course of action. Why you did that? Or can the management's ability to pursue a specific course of action provide relevant information that would allow me to match the evidence? For example, if I say that provision for bad debts was at 10% last year, and this year they provisioned it at 20%. Last year it was 10 and this year it's 20, so no problem with the change. So I won't know it on my own, right? I have to ask the management about it. Why did you do this? Then I will understand management's intention. And with AP, I will analyze that last year it was 10, this year it is 20. Why? Because sales have increased. So there is a chance that the bad debts will increase. If this happens, then I need to make a provision. I will understand a pattern. I always have to be suspicious. Application of professional skepticism. In evaluating responses provided by management is important to enable the practitioner to evaluate whether there are any matters that would cause the practitioner to believe the FS may be materially misstated. So students, I should always need to have a skeptical mind and be aware that there could be many reasons. Here I felt that the FS can be misstated. Performing inquiry procedures also assists the practitioner in obtaining or updating the practitioner's understanding of the entity and its environment. I can understand about the company and I can understand about its environment. Here I can see where the misstatements could take place, right? This is given behind the module that why inquiry and AP are important. Just rote memorize it with all the full stops but in pointers. It is an important source of management's intentions. Okay, what's the benefit of making inquiries? We will get to know management's past history and their intentions. Okay then. Management's ability to pursue a specific course of action may provide relevant information for collaborate. Evidence through inquiry. What is the benefit of using professional skepticism? What's the benefit of application of professional skepticism? Practitioner will catch all the misstatements that are visible now. Other benefits of inquiry are understanding about the practitioner's understanding of the entity and its environment. 5 benefits, 5 points with full stops. Write in simple way. Okay then. Now see, these are different situations. You just have to read them, the procedures to address specific circumstances. This whole answer won't come. Either for related parties. Wait, quickly tell me SA number of related party. Siddharth wrong, it's 550 for fraud. It's 240. GC is 570 and 600 for work performed by others. Another auditor is 600, internal auditor is 610, 620 is for external expert. These all are in 600 series. These are 4 independent situations. Just read them, just 3-4 lines each. Okay. Then, additional procedures when the practitioner becomes aware that the FS are misstated means we have performed the procedures and found some misstatements. What should we do? If practitioner becomes aware of matter that causes them to believe that FS are materially misstated, he shall design and perform procedures to what? Just understand this. Conclude that the matter is not likely to cause the FS as a whole to be materially misstated, or determine the matter causes the FS as a whole to be materially misstated means. So, whether I should conclude that there is a misstatement happening or I should conclude that there is no misstatement happening, it's waste of time. What was the question? What are the additional procedures? No. If I feel that there is some matter that is causing FS to be misstated, then I have to design the procedure. Why? I have to decide whether the FS are misstated or I have to decide that FS are not misstated. Procedure is not yet explained. So who will tell me whether the misstatement is happening or not? My heart? Means what does the professional judgment of the auditor says? The practitioner will perform additional procedure if he believes that FS are materially misstated. What additional procedures to be applied is a matter of the professional judgment of the auditor. I mean practitioner, a matter of practitioner professional judgment. Now what is that? A little topic. What did we learn in the entire review? We only learned inquiry and AP. What do we need to add here? Additional inquiries. Like for example, being performing greater detail or being focused on affected items like showing issue in stock, do the inquiry and AP of stock, do it more deeply. What other types of procedures are possible? Substantive procedures, such as tests of details or external confirmations. So guys, these are our examples. So point number 5, what does it say? It says about additional procedures. It's completely similar to BCom. If the practitioner becomes aware that the FS are materially misstated and perform additional procedures to conclude that whether the FS was misstated or not misstated, what additional procedures should be performed, it is a matter of practitioner professional judgment. This procedure can be an additional inquiry or AP or other types of procedures. And in the exam, you might get asked step number 5 separately. Okay, out of these 4, any of it could be an MCQs, just read them. Or you might have to write about inquiry or AP, or why is inquiry or AP is important, but they won't ask this whole at once. Okay? First, materiality. Second, obtain understanding. Third, design, perform procedures. Fourth, any specific circumstances. Fifth, perform additional procedures. This is over in 5 steps, only one part will come. Inquiry AP has more weightage. Okay? Please read it once. We will read the content of the module later. For now, read this here on the screen. What is difference between 3 and 4? 3 is generic procedure, 4 is specific situation. The management has prepared the FS. I found a related party there. While conducting review, what procedures to follow regarding related parties? If I see fraud and going concern, then. And those specific situations are written there. Okay? Question number 6. Now here we have WR. You can't say anything about the marks. I mean, as per the new design, 40-50 marks might come in exam. Each chapter is of 4 to 8 marks. 2 questions carry 8 marks. 1 or 2 questions for MCQ. It will be of 4 to 10 marks. What are the main WR for a review engagement? It's the same thing that we study in an audit. Management has fulfilled responsibility for preparation of AFRF. They have provided practitioner with access to all information and all transactions have been reflected in FS. This same we studied in FS 580. But I will not teach you this. You tell me about the additional WR. Instead of remembering new points, it would be good to remember that we take additional WR in audit. Tell me what are possible additional WR. They have given a long list. What is main WR? You made FS as per FRF. You told me all information. Furthermore, anything but what anything? The identification and transactions with related parties is closed. The identification and transactions with related parties is closed. WR with respect to the assumption of going, but the question is not asked with relation to fraud. All legal courses have been disclosed. Assets. Tangible, intangible compliance of laws regulations are done. Components like subsidiary, associate, joint venture, branch and reason are disclosed to practitioner. Or subsequent events are identified for disclosure to auditor. It's done. Okay guys. Related party. Significant facts regarding fraud. Known or actual non-compliance of laws, all relevant GC assumptions, and all events subsequent to the date of the financial statements. Then material commitments, contractual obligations that have affected entities' financial statements. Non-monetary transactions for no consideration undertaken by entity means free transactions. Have you read this somewhere? Have you read this? Tell me where? In SA 580? Yes, it's 580. Return representation, discuss the matter with management, vibe and the integrity. And take appropriate action, right? Okay, now what will be next? Do you remember this? The practitioner, we read auditor there, and then this will be disclaim, disclaim, disclaim. Opinion can be withdrawn from engagement if possible, if there is doubt about this. Diligence, integrity, competence, ethical values or requested WR is not provided. Moreover, if you had studied SA 580, then questions 6 and 7 would have been easy. There is nothing new. Nothing's new here. Okay? Then, how does the practitioner forms an opinion on review engagement? It is similar to audit. Remember materiality and pervasiveness, the two things. Generally, you call it as unmodified. Another is modified. Okay? What did we learn in modified? There were two things. What were they? The FS is misstated. Another was unable to obtain the same. So this will be material plus pervasive, while here material is not equal to pervasive. Similarly, this will be material plus pervasive, while here material is not equal to pervasive. What would you say here? Adverse here, and this is qualify. Disclaimer and qualify. Now read it. It's written, read page 280 to 285, it's same. Now this is content of the practitioner's report. Digital addressee. Then place, sign and date. Okay, now it's common and check out more points. introductory paragraph that identified FS reviewed and the date and period covered by each FS, okay? Refers to summary of significant accounting policies, FS is reviewed. We reviewed FS, we entered the date inside it, whatever was paid. We reviewed FS referred to summary of significant accounting policies. Again, it's same, responsibility of the management, right? Practitioner's responsibility to express conclusion on FS including reference to SRE 2400. If you want to make separate pointer, you can make it. A description about the engagement has been performed as per SRE 2400. Then, description of review of FS and its limitations. Then, paragraph containing the heading that the practitioner's conclusion on FS as a whole is appropriate in reference to the FRF used to prepare the FS. Therefore, this is made equally, and if you want, you can write it in your notes. Refers to practitioner's obligation under SRE to comply with relevant ethical requirements. What do we have here? Practitioner's management's responsibility and the engagement as per SRE 2400. These three are important, so learn it. SRE 2400. This is important. Listen attentively. Date of practitioner's report. Logic is you are giving opinion. Limit assurance engagement. Until there is evidence, how can you give opinion? I say Nitin is a boy. But how do you know? There is evidence to prove it. How can you judge without evidence? Tell me how. It's the same thing. This is common and came before. The practitioner shall date the report no earlier than he obtained SAE. And as the basis for the practitioner's conclusion on FS that all statements that comprise under AFRF have been prepared. Everything has been made. Those with recognized authority have asserted that they have responsibility for those FS. Those with recognized authority have asserted that they have taken responsibility. Who has taken responsibility? Management. Therefore, the entire FS has been prepared, right? And management has acknowledged its responsibility, and I have evidence of it. If I have evidence, I can sign the report. Now the opposite. And when will you sign the report? When will I sign the report? When I have the evidence. What kind of evidence? I can see that the financial statements have been prepared. And the second is that management has taken responsibility. They have done everything. Now I can sign it. So the previous model also has question regarding this. That's why I have written this. Okay. What documentation will the practitioner prepare for a review engagement? This is also common and I have read it before. NTE of the procedure performed. If there is procedure, there must be a result. The results would have given something important. This is called significant matter. It's common. NTE of procedures performed, results obtained from procedures, significant matters arising during engagement. Practitioner's conclusion reached thereon, significant professional judgment made in reaching conclusions. NTE of procedures performed and result obtained from procedures, and significant matters arising during the engagement and practitioner's conclusions reached thereon. And how did his professional judgment regarding conclusion came along? While documenting the NTE, what other documents will he prepare? Who did the work? When was it completed? Then who reviewed the work? Who performed the work on the date such work was completed, and who reviewed the work for purpose of quality control? This was also a separate question, and questions on documentation are also on standard. This is common. NTE of procedures performed. Results of procedures performed, significant matters arising during engagement, conclusions reached. And how did he reach conclusion and his professional judgment? And other documents like what was done, who did it, when was it completed, and who reviewed the work? Who did the work, when was it finished, and who reviewed the work? He shall document the discussion with management and TCWG and how the inconsistency identified were addressed. So, make this common. Any question about the standards, or documentation, this will be the only common answer. NT of procedures as per called standard. The results obtained from the procedure and the practitioner's conclusions arising during the engagement and the practitioner's conclusions thereon. Clear? Discuss with management and TCWG. He should also document inconsistencies identified were addressed. Who did the work, when was it done, and who reviewed it? It's completed. My final answer mentions the audit versus review. What is it? Audit is reasonable assurance. Limited assurance. It says it is a type of limited assurance, providing a lower level of assurance than reasonable assurance. Hold on a minute, everyone be quiet. What is a 100% assurance? Absolute. Meaning investigation. Okay? Now, as per this line, he is saying that our assurance is decreasing. It means you will state here that you have reasonable assurance. That is an audit. Then comes limited. That is called a review. 50% of the things are correct. This one is preparation. It should be the preparation of FS. Preparation of FS. This preparation of FS is fine. This was made by management and we made as it is 50%. Okay, what comes next? What will be the next chapter, guys? It will be review. And after this, auditor will. He will check it. Okay, is this clear? It was my mistake. I misinterpreted. Is it correct now? Sorry, guys. After this, we will check deeply 100%. Management prepared FS. They made it properly. Asked practitioner to check. He will check it and that's your limit. It's the same, and thereafter we went to the auditor and the auditor said it's good, at the same time reasonable. If there are any doubts, we will conduct 100% investigation. So, ARL, absolute reasonable limited. It's type of limited assurance providing lower level and reasonable assurance. Then, it draws reasonable conclusions on basis of psi. We did it before. And it draws limited conclusions on the basis of psi. Okay? It provides assurance, opinion, and conclusion that the financial statements you prepared are accurate. So this is the conclusion. I think it's right. In audit, we provide opinion, while here we provide conclusion. The language is positively worded, but everything here is negative. You haven't done this, you haven't done that, this is wrong, you did wrong, this is all negative. There everything is right except for one thing. It performs two things, TOC and substantive procedures. This includes inquiry and AP. It's only two procedures here. Okay? This is also same, and second point of question 1 is same too. Listen to me carefully. It's fine according to the management. Management made the FS. It's fine as per them. Furthermore, now the auditor says that you are wrong. So what will come in between? Our review will be done. Therefore, in review, what will happen? Then our risk will be reduced. Anyway, you can never reduce the risk to 0. Reduce it to acceptable level. It's risky, and here the risk is. Hi guys, what's up? Alright guys, so today we are revising reporting on fraud under section 143. Under section 143. May you please take out the notes you have. So I am on page number 213 in the book. Please take out any notes or books that you have from your teacher, or if you have my handwritten notes. Fraud reporting under 143.12 was very simple. Let's see section 143.12, a 2-3 mark MCQ question you might get. So what does this say? The auditor, while performing his duty, like when he was conducting the audit, he has reason or say evidence that fraud is being or has been committed against the company. Now, who have committed the fraud? By the officer or maybe the employees. Fraud has happened where we went for an audit. And we are talking about the initial audit. As fraud happens, you will report to audit committee or board of directors. If there is audit committee, then you will go to them. Otherwise, you will go to the board of directors. And you will go within how many days? Within 2 days. Within 2 days, you have to report it. You will report nature, description, approx amount, and parties involved. When do you have to report fraud? Now, if the fraud is small, you will report it to just the audit committee or the board. But if the fraud is big, if it's big, then what will we do? Then we have to go to the CG. Wait 1 second. So look, the auditor discovered fraud while conducting an audit. He will quickly report to the audit committee. If there is no audit committee, then he will be reporting to the board of directors. After interpreting immediately, he need to report within the time of 2 days. Then the audit committee or the board, whoever it is, they will revert back within 45 days and will ask you in detail about the fraud. If the reply has arrived, the auditor will report it to CG. He will go to CG. Within the 15 days of the receipts of the reply. And what will he take along? He'll take along details, reply and comments. What all will he take? Details of what happened, reply and comments. If the reply did not come. If reply did not come. If reply is still not received, the auditor will go to CG within 15 days after the expiry of the 45 days. What details will auditor take with him? Because reply didn't come, he won't take reply. Comments will not be taken, but what will be taken? Fact of non-receipt of reply. He will report the fraud in ADT4. The form number is what? It is ADT4. It's ADT4. If in case the section 143.12 is contravent. So if it is contravent, for listed companies penalty is 5 lakh, for other companies penalty is 1 lakh. For listed it is 5 and for others it is 1 lakh. This penalty will be imposed to whom? To the auditor. Your job was to audit a listed company. Your job was to report fraud to the CG. You did not report it. As an auditor, you will be penalized for 5 lakhs. If you were working for another company like an unlisted public company or private company, then you will pay a penalty of 1 lakh. So this section is applicable to statutory auditor, secretarial auditor, cost auditor, branch auditor. Statutory auditor, secretary auditor, cost and branch. Statutory secretary, cost, branch auditor. So the auditor will report to CG. He'll report to CG only if the amount is 1 crore. The auditor will only report to CG if the amount of fraud is at least 1 crore. If there is a fraud of 80 lakhs, only the first step will be taken, audit committee and board. If there is a fraud of 1 crore 25 lakhs, 125 lakhs, then first step will come. Along with that, the rest will also come. Alright? If a question comes in an MCQ asking, when should the auditor report the fraud to the CG? He should report only if amount of fraud is a minimum 1 crore. What are the number of days for reporting to CG? The auditor will report the fraud to the CG within 60 days. Auditor will report the fraud to CG within 60 days. He will report within 60 days. The breakdown of 60 is 45 and 15. In MCQ, select 60, but in descriptive, show breakup of 45 and 15. If it is MCQ, then it is directly 60 days to report the fraud to CG in 60 days, okay? Now the auditor will report the fraud only if it is committed by a company's officer or the company's employee. He will report fraud if it is conducted by a company officer or employee. Clear? Your 143.12 ends here. It was very simple. The auditor will report the fraud to CG if and only if the amount of fraud is at least 1 crore rupees. And the fraud is conducted by the officer or the employee. The amount of fraud should be reported to in the form number ADT4 within 60 days. Remember this. So in 5 minutes we have revised 143.12. How was it? And did you understand? Is this clear? (143.12) done. Now let's see duties of the auditor. What comes next? The duties of the auditor. What does it say? So section 143.1. 3 section of 143.1-3.2 is just like that. Section 143.1, he has to make inquiries into specified areas. He has to make inquiries into specified areas and code is LT dies. There are 6 areas: loan, transactions, deposits, investments, expenses, shares. Loan, transaction, deposit, investment, expense, share. Mark this in your notes. The auditor will always make inquiries under section 143.1. He will check these areas always. He will report to the shareholders in the audit report only if he is not satisfied. If he has not reported, it is assumed that he is satisfied. Not reported means he is satisfied. These are 6 areas. Loans and advances should not be prejudicial to the interest of company or members. So transaction should be, check if transaction is represented by a book entry and it should not be prejudicial to the interests of company. Deposits, check loan and advances are shown as deposits. Check whether the investments are so less than the cost price. I, check whether personal expenses are debited to P&L revenue account. Check if shares have been allotted for cash, if cash has actually been received, and if it is not misleading. The code is what? LT dies. Loan, advances, transactions, deposits, investments, expenses, shares. Quickly read 143.1 once. Just have a look. Done. Next. Now this 143.2 only states one thing, that auditor should report whether financial statements are giving a true and fair view. So how do you remember 143.2? True and fair view, what would you say? 143.2, true and fair view. Next comes reporting requirements. What are the reporting requirements? ABCDEFO, what is the section number? 143.3. ABCDEFO. The report shall also state A, all information explanation to best of his knowledge and belief, and if he has not obtained details and effects mentioned in FS, A, all information explanation is obtained. B, the company has kept proper books of accounts including branch books of accounts as required by law. C, company's balance sheet is in confirmation with BOA. Company's balance sheet P&L in confirmation with BOA. D, the FSRS are done as per AS. E will be eligibility. Whether any directors disqualified under 1642. F, the company has disclosed adequate internal financial control with reference to financial statements. Other matters as may be prescribed, so the code is ABCDEFO. All information explanations have been obtained. Company has kept books of accounts. C, confirmation with books of accounts. D, done up as per AS. E, eligibility. F, company has adequate internal financial controls. And O, other as may be prescribed. Then, under others comes first, impact of any pending litigation if any has been disclosed. Second, make provision for material foreseeable losses. Third, delay in transferring the amount to IEPF, which is for Investor Education and Protection Fund. So these ABCs were old, then D was omitted. E, this is new. So as the company has not given any loan or advance to any party. Now that party, they gave it to the third party. Okay, let us suppose that we are auditing in a company and that company is A Limited. A did not give to B so that B could further give to C. No such transaction has taken place. So ultimately A's money did not reach C till now. Okay, so ultimately the beneficiary becomes A. Then this was the one who was going to give. Number 2 is about taking. Our client has not taken money from anyone in present so that they can pay someone else further. No money has come and they have not given any money to anyone. There has been no such transaction. The one who is giving becomes the funding party, they will become ultimate party, and we become intermediary. So neither our client has given and nor he has received. Whatever I am saying is true. So in 1 and 2, it doesn't contain any material misstatement. These two parts, or say these points, are newly added. Then F means in A, B, C, D, E, F, O, we are doing the others one. Whether dividend declared or paid this year in compliance with Section 123 of the Companies Act 2013. Whether dividend declared or paid during the year by company is in compliance with Section 123 Companies Act. Then, whether company in respect of financial from 1st April 2023 from when, April 2023, had made accounting software which has features like audit trail, that is edit log facility. A question may come on this. If the company for financial year from April 1st 2023 made accounting software that has edit log audit trail features. Understood? So in the others portion, this is the point which is below. Now I am giving you 5 minutes and in this you will read the entire section 143. The part about the others is important because it is new. Read comfortably. Is it done? Okay, so this one is now finished. Now we are moving on to Caro. Caro is very simple. On whom is Caro applicable? It is applicable to all companies. Caro is applicable on whom? To all the companies including foreign companies. Caro is not applicable to following companies. Its code was BIPS. B for banking companies, I for insurance companies. From P it was private limited company, from S section 8 OPC and small company. Call it BIPS in code. B for banking company, I for insurance company, P private limited company and S section 8 OPC and small company. S was section 8 companies, OPC companies and small companies. In the definition of a small company, we said the paid up capital should be less than or equal to 4 crore and the turnover should be less than or equal to 40 crore. It's and here. So 440. In a private company, there are 3 conditions. Where the paid up share capital is less than or equal to 1 crore, paid up share capital less than equal to 1 crore and outstanding loan. Outstanding loan is less than or equal to 1 crore and outstanding loan is less than or equal to 1 crore and its revenue is less than or equal to 10 crores. Capital less than or equal to means maximum it is 1 crore, loan less than 1 crore and revenue less than 10 crore. We call it 1110. If all 3 conditions are satisfied, then Caro will not be applicable. If any one condition is contravened, then Caro is applicable to that private company. Okay? If a company is private company and also falls under definition of a small company, check if it is a small company. If it is, it will be exempted. It will get exempted. Caro will not be applicable. Is it clear? Then we have 21 clauses in Caro. Caro's clauses. Let us pick up each clause. I have given you these notes. Okay, those who don't have these notes, you can download from the website which you can see below. Download from www.letslearnindia.in. What does it say? First, so our code is FIDA se PC statutory dues and defaulted from F. First clause will be fixed assets. What are these tangible and intangible assets? Okay, first block is records should display detailed quantity situation of both tangible and intangible assets. Whether physical verification is carried out at regular intervals. Material discrepancies, if any, should be reported. This was the block of 3 points. Now let's see number 2. Whether the title deeds of immovable property like, so one can be the building of the factory. Okay. All structures, land, buildings and title deeds of immovable property displays that the property is held in the name of the company, except if company is lessee, like if we rent, it will not be on our name. If we are the owner, then it should be on our company's name. But if the title deeds is not in the company's name, then what details should be given by you? Description, gross carrying value, whether it is held in the name of promoter, director or relative. End. Period, held and reason for not being held in name of the company. Auditor will ask, sir, did you get it from the directors? Did you take it from your employee or from his relative? Just tell me, it's okay. Then, let's see next points. Whether revaluation has been done by the company of its PP. And whether revaluation is done by a registered valuer. Whether revaluation is done by the company PP or it is done by a registered valuer. In case of a change in revaluation. So in case of a change. Specify the amount of change if the change is minimum. Minimum when? 10% net carrying value of each class of PP or intangible assets like furniture, fixture are one category, within that there are tables, chairs. So changes in this won't matter. If entire block of furniture fixtures changes, like how much? Minimum 10% upside, 10% downside, 10% upside, 10% downside. You need to give the details. You need to give details. Okay. Now whether any proceedings are initiated or pending. Whether any proceeding is pending or initiated against company under BTPA, Benami Transactions Prohibition Act in 1988. If yes, whether it is disclosed in FS. So this is the first block for the physical verification. Then there's a block for the immovable property. Then there's revaluation block, and last one is BTPA Beyond Transaction Prohibition Act. Your fixed assets section is over in 4 blocks. Institute will not ask all 4, it will ask just 1. You have to write clause number 1. Write 1 in Roman numerals. 1. Write it like this. This is how you write the number 1. Okay. Then next clause number 2 would be your inventory. I've written it normally. You will write it in Roman numerals. The same point applies to inventory, which is whether physical verification is carried out at regular intervals. Whether physical verification is carried out at regular intervals, number 2. Whether material discrepancy, meaning changes, right, of a minimum 10% is properly dealt in BOA. Whether the material discrepancy of minimum 10% is properly dealt in BOA. There is no percentage on material discrepancy but on revaluation. So there is 10% on revaluation. There are no such points on material discrepancies. If you see material discrepancy, you need to report. The minimum is 10% in the inventory. Minimum should be what? 10% in inventory. Now you have many questions on this in book. Has a company taken a working capital loan of more than 5 crores? Has taken a working capital loan of more than 5 crore from a bank or a FI on security of current assets, then disclose it. Then our quarterly statements or annual statements filed by company to the bank or FI is in agreement with BOA. Give details if not. Quarterly statements or statements filed by company to the bank or FI is in agreement with BOA. If not, to give details. So I is inventory. F for fixed assets, I for inventory. Now D. D for debts given whether the company has given LIGS. LIGS means loan investment guaranteed to company, firm, LLP or any party. Okay, so there is no fault. You just have to disclose it. Whether company has given any loans, investments, guarantees, securities to companies, firms, LLP or any party. If yes, you will just disclose it. So if there is an LGS, which is loans, guarantee, security, who has been given? So if it has been given to SUJ, which is subsidiary, associate, joint venture, you will tell total amount and balance outstanding on the balance sheet. So total amount during the year and balance outstanding on the balance sheet date to SUJ. Then in part B, you have to state total amount during year and balance outstanding on balance sheet to parties other than SUJ. A is for SUJ, B is for other than SUJ. This disclosure is done for Caro in reality, so learn theory for exam. Then whether the LIGS made is not prejudicial to the interest of the company. To the interest of the company. C. Whether the repayment of principal or interest is regular. Whether the repayment of principal or interest is regular. If the amount is overdue for more than 90 days, check whether company has taken reasonable steps. We are not supposed to do the recovery. If we see more than 90 days overdue, we just need to check if management took recovery steps or not. E. Whether any loans and advances were renewed during the year, renewed during the current year, or any fresh loan is granted to settle the overdue loan like an old loan to the same party and specify the amount of such loan, renewed or fresh loan. Someone's loan was outstanding. He is unable to repay and he says, "Sir, give me another loan. Then I will earn new money and repay all your loans." So we gave him a fresh loan to settle overdue loan. Or we renewed his loan, take another 5 years and pay it off slowly in 5 years. So the company has not done anything wrong. It only has to make a disclosure. Then, whether the company has granted. Whether company has granted loan and advances either repayable on demand or without specifying the terms. Period of repay, whether company has granted loans, advances either repayable on demand or without specifying terms of repayment period. So you have to tell short-term loan. You have to tell total amount, specify the total loan amount and percentage of total loan granted. Okay, if the total loan amount is 1000 crore, we have given a short-term loan of 10 crore, so you will write 10 crore rupees and tell its percentage to the total loan granted to whom you gave. Whether it's given to the promoter or to the related party, to whom is it given to? Okay, so fixed assets are done, inventory and debts. A is for the adequacy of 185 and for 186, then our code becomes FIDA. Fixed assets, inventory, debts, A means adequacy of 185, 186 done. The auditor should check if provisions of sections 185 and 186 complied, if not give details. Auditor should check if provisions of section 185 and 186 complied, if not give details, FIDA done. P, public deposits. For the deposit, accepted an amount which is deemed to be deposit. Auditor should check DPO. What does DPO means? Directives, provisions and orders. The directives of RBI, provisions, Companies Act, orders, NCLT are compliable for deposits accepted or deemed deposits, whatever it is. Auditor should check DPO, directives of RBI, provisions of Companies Act, orders of NCLT. Now from C will be your cost records. It will be your cost records. Whether cost records under section 143 are maintained, if not, please give details. Whether cost records under section 148 are maintained, if not, auditor should give details. So FIDA say PC fixed assets, inventory, debts, adequacy, FIDA done, then public deposits and cost records. You need to remember the numbers because for marks you will have to write answer in descriptive portion in exam. In MCQ also you might see it will give the number and you will identify which clause it is. Or you will get clause and have to select right number. So FIDA say PC fixed assets, inventories, debts, adequacy of 185, 186, then P public deposits, C cost records. Then comes your statutory dues. Two aspects of statutory dues, undisputed and disputed. In undisputed, if outstanding for more than 6 months, it should be reported. And in disputed, you'll always report amount and authority. So in dispute, you'll always report amount and authority. So FIDA say PC statutory dues. You will say statutory income and it defaulted. What will come in income? This was asked in the exam. Whether any unrecorded or undisclosed income is disclosed in accounts during a year. If any unrecorded or undisclosed income is got, check whether they are disclosing their accounts or not. Will not disclose. We need to check if management has disclosed it. Auditor should check whether any unrecorded, undisclosed income is disclosed in accounts during the year. Statutory income and it defaulted. What will you say in defaulted? This is also a very important clause. Whether company has defaulted repayments to the bank, FI government or debenture holders. Whether the company has defaulted repayment to the bank, FI government and debenture holders, you have to give the details lender-wise. Okay, check if the company has declared itself as a willful defaulter. Are long-term loan used for the purposes for which they were obtained? Term loan means long-term loan. Are term loans used for the purpose for which they were obtained? Next is short-term. Check whether short-term loan is used for long-term purpose. Are term loan used for purpose for which they were obtained? Are short-term money used for long-term purposes? Has the company raised money from individuals or entities and used it to pay off the obligation of such? This means that our holding company took loans from people and used the money to pay off the obligation of such. So disclose it. Or has a company raised money by pledging securities in such subsidiaries, associates, joint ventures? So guys, we took a loan, okay? And what did we keep for mortgage? For example, the investments that we had. What would a holding company have done? How does it become subsidiary? When there's more than 50% stake. So keeping those shares as security is not a crime, just disclose it. Clause number 9 and default in repayment of borrowing is important. 10. First, we will read first 9 clauses from FIDA, fixed assets, inventory, debts, adequacy, then PC public deposits, cost records. Has statutory dues, then comes income, unrecorded income, and it defaulted. Default in repayment of borrowings. So for you guys, the first 9 are very important. Okay. Then 10th. What does 10th say? It's public offer. So check this. IPO or FPO. IPO means initial public offer. FPO means further public offer. If money raised is used for proper purpose, you have to give details of delays and rectification. It should be given. Whether money raised was used for proper purpose, details of rectifications should be given. So whether preferential allotment under section 62 is complied or whether private placement under section 42 is complied. Whether preferential allotment, private placement is complied with or not, you have to write earned money from public. What did he do? So at number 11, he committed fraud. We just learnt about fraud, right? Fraud by the company on the company, its nature and amount should be reported. By the company on the company, nature and amount should be reported. Then has the auditor filed a DT4? When do we file a DT4? We file a DT4 when the fraud is minimum 1 crore and we file it with CZ, correct? In case of whistleblower complaints, whether the complaints have been considered by the auditor, whether complaints answered by the auditor. So what happened at number 11? Fraud was committed. Okay. Then what did we do in 12? We gave it to Nidhi. They collected money from public and defrauded them. So first they committed fraud. Then they gave it to Nidhi, which means Nidhi company. Auditor should check net owned fund to deposit liability 1:20 maximum ratio. If my net owned fund is 1 rupee, what's maximum amount of money I can accept as deposit liability from people? I took money from people as I have to repay, so I can take maximum 20 rupees. Maximum. Minimum 10% of the total deposit should be invested in unencumbered term deposits. Minimum 10% of total deposits should be invested in unencumbered term deposits. If suppose I have taken a loan of 100 rupees for a work, then what will I have to do? So the deposits of 100 that I have, on 90 I can take loan and 10 should be loan free. 10 rupees I won't keep mortgage. Minimum 10% should be unencumbered, means without any charge. And then it was given to whom? To the relatives. Auditors should check whether section 188 is complied or not. If it is not, then give details. Then they shared it among themselves. Internal audit. Does the company have an internal audit system? Has a report of internal auditor been considered by stat auditor? Have the report of the internal auditor been considered by the stat auditor? That's internal auditor. Then what was done? The goods were given after dividing the money. What do we call for goods? Non-cash transactions. Whether restriction under section 192 is complied, forget what's 192. We just see whether the restriction under section 192 is complied or not. Then, what is left at the end? Section 45IA. What is left? 45IA. 10th point talks about public offer, making money. 11th point, fraud was committed. On 12th, it was given to family or relative. 14 was divided amongst. 15 was non-cash. 16. 45IA. So what is left in the last is 45IA. This is also important. Has company obtained registration from the RBI? If you are NBFC, who will control your actions? RBI. Has company obtained registration under RBI? Is the company carrying non-banking or housing finance activities without a valid registration certificate? Non-banking or housing finance activities without valid registration certificate. Is the company CIC? CIC means core investment company. You must see in the question bank. There is a question about CIC. Those are exams questions, so do see those. You'll find it at the chapter's end. Is company a CIC means core investment company, and is it exempted or unregistered? Does it meet the criteria for exemption? If it is unexempted or unregistered, does it meet the criteria for exemption? Then does the company, meaning the group to which the company belongs, have more than one CIC? Then indicate number of CIC in the group. Just write number of CIC. How many CIC are there like these? These are 4 points for NBFC. Has company been registered from RBI? Is company carrying non-banking housing finance activities without a valid registration certificate? Is the company CIC? And if it is exempted or unregistered, does it meet the criteria for exemption? If group to which company belongs has more than one CIC, then indicate number of CIC in group. So 10 to 16 runs together. Cash losses. Has the company incurred any cash loss in the current year or previous year? Give the details of current or previous year. 18 resigning. 18 resigning what? 18 resigning. Resignation of stat auditors. In case of resignation, has auditor considered issues, concerns, or objections raised by outgoing auditor? In case of resignation, has the auditor considered the issues, concerns, objections raised by outgoing auditors? 19 is about material uncertainty. What would you say? If material uncertainty exists, auditor should give details. Then he should write in auditor's opinion whether company can meet its liabilities that are due in future. So what would you say? You will tell whether the company can meet its liabilities which are due in the future. 20. Transfer to CSR fund. If any amount of CSR remains unspent, it is transferred to a special account which will be under section 135. It is from schedule 7. Transfer to CSR fund under schedule 7, because if you cannot spend CSR funds for 3 years, then you have to pay money to government. This provision is for sending money to government. If the company has sent any money to CSR, you can give its reference here, whether any unspent amount of CSR is transferred to a special account under section 135 schedule 7. 21. Qualified adverse remarks. So this will come when company is a holding company, meaning it is a group of companies, then this comes. Qualified adverse remark in other group companies Caro report. So qualification adverse remark in the other group companies Caro report. In subsidiary associate, okay? The auditor should give the details of the company name and the paragraph number of the respective Caro report. Containing such qualification or adverse remarks, for example, in my organization, clause 8, 11, 15 are contravened. In baby 3, 9, 16 is contravened. In Banta 2, 5, 8 is contravened. These are clause numbers. So their respective auditor said that this is contravened. So what will the auditor of my company of holding company say? In Santa Limited 8, 11, 15 contravened. In baby 3, 9, 16 contravened. In Banta 2, 5, 8 is contravened. Okay? So just do cross-referencing. These are your Caro's 21 clauses. All this is very important. Please remember this. I am doing this for the exam. If any one of you want a quick revision batch for a fast track crash course, if you want a regular batch, you'll have to go to our website. This is for exam. 21 clauses. F. Fixed assets. I. Inventory. D. Debts. A. Adequacy 185, 186. P. Public deposits. C. Cost records. Statutory dues and income and defaulted, unrecorded income and defaulted. These are 9 and then 10. Public offer, make money from public 11. On 11 they did the fraud then. In 12 they gave it to Nidhi 1:20. Clause number 12. 12 is 1:20. 12 1:20, remember it. 13 is referred to who? Relatives, right? 14th was dividing amongst each other 15th. Non-cash. 16 NBFC means 45 IA. Finished? 17? 17 is cash losses, resignations in 18 and material uncertainty in 19. 20 transfer to CSR fund. 21 qualified adverse remark in other group companies in Caro report. Done. Finish. So this whole part is finished. Okay. Okay, bye guys. Aim for a rank of 70 or higher, whichever comes first, or take care. Hi guys, what's up? So today we are starting with the revision of the group audit chapter, which was previously known as the audit of CFS. Let's start. So, if you have the notes given by me, then take those notes out. Regular batch students, fast track batch students, crash course batch students, exam oriented batch students, super fast track. Whatever is your batch, please open your notes. If you studied from a different teacher, take out any notes or books you have from them. And please also keep in mind that this is a revision class for the exam. For regular content, you need to visit the website of www.letslearnindia.in. I will go quickly through these things here. These are concepts to be recalled for the exam, so my pace will be fast. Let's start now. We'll first discuss concepts followed by questions. So Section 129 of Companies Act states every company which has one or more subsidiaries, associates, joint ventures, What that company has to do in that case? It shall do what? Meaning, what shall it do in addition to its own FS? In addition to its own FS, it shall also prepare the CFS of the company and including all its subsidiaries in the same form and manner as its own. Its own FS will be called SF, which stands for standalone financial statements, along with subsidiaries, associates and joint ventures, which are referred as such SAJ. Out of subsidiary, associate, joint venture, which one should be done? Look, the provisions applicable to the preparation of FS of the holding company shall also apply mutatis mutandis to the CFS. What's next? AS and AS, whatever is applicable, like Schedule 3 was applicable for SFS, so the same will be applicable for CFS as well. At time of holding company, whatever format is applicable for the standalone company, same format is applicable for the CFS too, and shall be prepared as per Schedule 3. And we have written applicable accounting standards because in some places AS is applicable, in some places Ind AS is applicable. Now the company, along with its financial statement, shall also attach the salient features of the FS of the subsidiary in the form called AOC1. This is not for the exam. All this is just relevant content given in the model for the purpose of reading. The main answer starts from here, exemption from CFS under Companies Act. C. A has invested in B and B has invested in C. If A has invested in B, then it will be either 100% or more than 50%. Then what will B become in that case? Either subsidiary or wholly owned subsidiary. If B has invested in C, then the subsidiary will be C. So sub-subsidiary, this is subsidiary and this is holding company. Okay? A, B, C. Holding company, subsidiary, sub-subsidiary. A subsidiary's offspring is sub-subsidiary. Now, B gets an exemption. Who gets exemption? B does. What is B? It is an intermediate subsidiary. B gets an exemption, that is intermediate subsidiary. Why? If it's fulfilling some conditions, 3 to be precise. What are those conditions? First condition, it requires NOC, meaning no objection certificate, from all members or one member and. Now look at the second condition, which goes like, it is not a listed company and not wanting to get listed. Third condition to be fulfilled is its ultimate holding company prepares CFS. If the ultimate holding company is preparing CFS, then there is no need to consolidate B. So this is the exemption which is provided to the intermediate subsidiary under the Companies Act. Exemption from CFS as per Ind AS has also come in exam many times. As per Ind AS 110, so remember the number for MCQs. As per Ind AS 110. Remember, as per Ind AS 110, it's about investment entity. An investment entity need not present its CFS and it should measure all its subsidiaries at the fair value through P&L or FVTPL. As per which Ind AS? As per the Ind AS 109. And the parent company of such investment entity. Parent company of such entity shall, however, prepare the consolidation including those of the investment entity and other entities which is controlled by such an investment entity. So the parent company of such an investment entity has to consolidate all of them, including the investment entity along with all its subsidiaries. If parent company also needs an exemption, the parent company itself should be what kind of entity? Look, it should be an investment entity. However, such parent entity won't prepare CFS if such parent entity is itself an investment entity. If it's itself an investment entity, both exemptions answers are important. Okay? Giving you 2 minutes time. Quickly read this once. I am just turning off the video so that you all can read it. Read both, meaning exemption of Companies Act and exemption of Ind AS. Questions come on specific exemption, but Ind AS has more weightage, so read it. Done? Now, next topic is responsibility of parent entity. Okay? Look at point number 3 here. So, as a parent, it will look after its offsprings first, so you have to remember it like this. First is identifying the components, including the financial information of the components. Number 2, identify reportable segments for segment reporting. Number 2 is identify segments for reporting. Identify related parties and related party transactions. Identify RP and RPT. None of the offsprings should ever lie, so obtain accurate and complete information from components. Fourth is obtain accurate and complete financial information from the components. Then make proper consolidation adjustments. Include everyone, no one should be left behind. Fifth, harmonize the accounting policies. Seventh is gap conversion wherever applicable. Remember point of gap conversion. Let's recall again. 1 is identifying components including the financial information, and 2 is identifying reportable segments. 3, identify RP, RPT. 4, obtain accurate complete information. 5, make appropriate conso adjustments. Then harmonizing accounting policies and gap conversion wherever applicable. This is responsibility of the parent entity. Next. The next topic is the responsibilities of the parent auditor while auditing CFS. Let's see it. He should validate the requirement for preparation for CFS and check those requirements. Then number 2, he should satisfy himself that the CFS have been prepared as per the applicable FRF. CFS have been prepared as per the applicable FRF. Third, then he should enable himself to express an opinion that the CFS is giving a true and fair view, so he should express that the CFS gives a true and fair view. Then he should inquire into the matters of 143(1) of Companies Act 2013, should report on the matters under section 143(3) of Companies Act 2013, so 1, 2, 3. Second one is of true and fair view. First is of LET DAC we had studied, and third is of ABCD. EF means the answer of reporting requirements. This is a very easy part. First, check requirement, and what is that requirement? Check if CFS has been prepared with FRF or not, then point with 143(1) about specific inquiry. 143(2) means a true and fair view. Then reporting on matters under 143(3) Companies Act. And this was the responsibility of parent auditor. Okay. Next topic is management representation as per SA 580. Let's see what is given under this. As per SA 580, WR requires auditor to obtain WR from management and where appropriate TCWG or those charged with governance. Taken on what things? Auditor should obtain WR from management on matters material to CFS. What are examples of those matters? Number 1 is the completeness of the components included in the CFS. Then number 2 is identification of the reportable segments for segment reporting, identification of RP and RPT for reporting, and appropriateness and completeness of the conso adjustments, including elimination of intragroup adjustments. It's from responsibilities of parent company. Identification of reportable segments for segment reporting, completeness of the components, identification of RP and RPT, and identification, appropriateness, completeness of conso adjustments. The answer for the responsibility of management is same as that of parent responsibilities. Then, the next topic is types of conso adjustments. So what is it? Types of consolidation adjustments. Now, these are of two types. One is PCA, which is permanent consolidation adjustments. 2 is CPCA, which is current period consolidation adjustments. Now, when do we make permanent consolidation adjustments? On the first occasion when a subsidiary is acquired, or on any subsequent occasion whenever there's a change in shareholding already held. Let's say it was an associate company previously. Then it became a subsidiary and then a wholly owned subsidiary. Let's repeat again. These adjustments are made either on the first occasion or on any subsequent occasion whenever there's a change in the shareholding already held. The code for this is ECG. E is for determination of equity attributable to minority or NCI non-controlling interest. And CG stands for determination of capital reserve or goodwill as per the applicable AS. Then we have CPCS, for which the code is if paise. What does if paise mean? Here I stands for intra-group interest paid and received. Next we have F. Let's see what it means in case of foreign components, that is gap conversion wherever applicable. P. So P stands for intra-group profits on asset acquired from the subsidiaries. A stands for adjustments relating to harmonizing accounting policies. Then I is for intra-group indebtedness. There were two in S. Adjustments for subsequent event. Subsequent event happens after the balance sheet date but before the auditor's report date. And second S is adjustment for significant transaction between date of components FS and date of parents FS. 31st December and 31st March. Okay. Mega CFS is prepared on March 31st, but subsidiaries year end is on December 31st, so adjustments are made for 3 months. Then determination of equity attributable to minority. E is for determination of equity attributable to minority or NCI. This is an important topic and can be asked in the MCQ as well. Then, the specific procedures to be followed by auditor in respect of the completeness of the information received from management. With respect to CFS, specific procedures with regards to information. Following are the procedures. Specific procedures can be hint. For the question and code is iska PJ works. What do you call this? Iska PJ works. I stands for review investments of the parent as well as its components. Then next is S. Review statutory records like registered under sections 186 and 189. C is identify changes in the shareholding already held. Next is A. It stands for review other arrangements. If there are any other agreements, then check those other arrangements. Then B for review parents procedures for identification of various components. Review parents procedures for identification of components, meaning how the parent identifies the components. J for review joint ventures and joint arrangements. W for review working papers for the prior years for known components. Okay? Clear? There's one more, make inquiries of management to identify new components. If you can write this, that's good. The code is iska PJ works. Check the investments. S review statutory records. C for changes in shareholding. A for other arrangements. P for parents procedure for identification. J for joint ventures, joint arrangements. W for working papers. For the prior years for the known components, so iska PJ works. Next. What are the disclosures which are given in separate financial statements but not included in the CFS? Means the disclosures that are already mentioned as standalone but are not repeated in the console. There are high chances of question worth 4 or 5 marks coming from this. Look at the answer. First point is sources from which bonus shares are issued. First is source of bonus shares. Second is disclose unutilized monies of issue of public. Issue third disclosure under MSME Act 2006. Let's repeat these three as they are very easy. First is sources from which bonus shares are issued. Number 2 is unutilized monies of the issue, or unutilized money of the issue means the public issue. And third is disclosure under the MSME Act 2006. Next. Point 4 is the value of imports calculated on CIF or cost insurance and freight basis for raw materials, components and capital goods. Next point is value of imports of raw materials, spare parts and components. So these are the two values given here. Then we have the expenditure in foreign currency for royalty, know-how and professional fees, and earnings in foreign currency for the same. Expenditure in foreign currency and earning in foreign currency. 8th point is amount remitted in foreign currency on account of dividend to non-resident shareholder. These are the 8 points under this. The first one is sources from which bonus shares are issued, then unutilized money of issue and disclosure under MSME Act. Next point is value of imports calculated on CIF basis for raw material, components and capital goods. Value of import of raw materials, spare parts and components. Expenditure in foreign currency for royalty, know-how. Then earnings in foreign currency for royalty, know-how, professional fees. Next is amount remitted in foreign currency on account of dividend given to non-resident shareholder. These are disclosures that are present in standalone but not in the CFS. This is a direct answer worth 4 to 5 marks. Write with space between each line. Next. What is given in question 9? How as an auditor you will report in CFS? It's part of reporting with long answer with 5 situations that may not all be asked. The first and the last are important. First is when parent and component auditor are same auditor should check compliance of applicable AS and ASN. FRF and report on true fair view of consolidated balance sheet, P&L and cash inflows and outflows. Which one will he report? Not the first but second and the fifth are important. Second is when the parent and component auditor are different, then the parent auditor will state division of responsibility by giving the percentage and the amount of the sales assets. Cash flow, I will repeat, parent auditor will share division of responsibility in the audit report by giving percentage or amount of sales assets cash flows. And division of responsibility is not construed as a ground for qualification. It's not construed as a ground for qualification. Division of responsibility will be stated in own paragraph as per SA 706. The division of responsibility will be stated in own paragraph as per SA 706. SA 706 other matter para. Just because the subsidiary's audit was done by someone else, it doesn't become a ground for qualification, so no qualification will happen here. Next, when does the accounting framework differ? So under this, if the components follow group accounting policy, from the beginning, the auditor should decide to rely on the local auditor of the component. The auditor may rely on the component's local auditor. If conversion entries are passed, meaning they have prepared them according to the foreign, therefore those entries need to be converted. Now who passes the conversion entries? The conversion entries are passed by the management. If the conversion entries are passed, then the auditor will verify the conversion entries. Auditor verifies them. This is according to group auditing, meaning according to India, the auditor will decide to rely on the local auditor. Now look at component. What they have done is they have prepared it according to local, which means it has been prepared according to US, so it has to be converted and the management will do the conversion. An auditor will verify the conversion entries. Next topic is what happens when the auditing framework differs. When the auditing framework differs, then when you are auditing, you have to follow Indian gas. What is the meaning of Indian gas? It means generally accepted auditing standards. This is Indian gas. Then when the component is not audited. So when a component is not audited and it is material, then what should auditor do? He should modify the report as per SA 705, considering both the qualitative and quantitative factors. If the component is not audited and it is material, the auditor modifies the report as per SA 705 and make sure that this question should be done properly from your question bank. Okay? Next topic is use of materiality in CFS. And materiality is very important from the exam's point. Look at the first point, which says the auditor is required to compute the materiality for the group as a whole. Next point, this materiality should be used to check the appropriateness of the consolidated adjustments, that is PCA and CPCA. Check the conso adjustment, that is PCA and CPCA, using this materiality. The parent auditor can use materiality computed at the group level to determine whether the particular components of FS are material to the group. So the parent auditor uses group level materiality to determine if a component of FS is material to the group or not. For each component, he should communicate the same to the component auditor. Parent auditor should obtain certain confirmation from component auditor, like independence, code of ethics, disclosure requirements. These two things are auditor's perspective, meaning auditor talks to component auditor while considering the observation, that is modification UM or OM of component auditor in his report. The parent auditor should also comply with the requirement of SA 600 using the work of another auditor. When considering modification UM or OM, SA 600 should be considered using the work of another auditor. Therefore, materiality would be considered when considering the observations of the component auditor. You have to consider the materiality. It is a must. The answer has 7 points. Please read it again. It is important. Okay? Done? The next answer is common answer for exemption. Its question is in many models and also in your book. It is about parent and child. How will you answer it? First, write the theory of section 129. It states company with subsidiary associate joint ventures must consolidate. Then write about Ind AS. As per Ind AS 110, an investment entity can be exempted from conso. Then copy the question. In conclusion, even if exemptions are given as per Ind AS, but they are not given according to the Companies Act, consolidation has to be always done. Then write as conclusion that if it's Ind AS considered. Then you will write there because no consolidation is required. If only 129 is considered, then consolidation is done, because if the question asks about Ind AS, then you will say there's an exemption as per Ind AS and consolidation is not required. But if section 129 is being discussed, there's always a consolidation because there's exemption as per Ind AS but not as per Companies Act. Exemption of Companies Act is to intermediate subsidiary of ABC and there are no other exemptions, so consolidation has to be always done. You have to disclose it via notes. It's there in the answer. The question about parent child is there in the question bank and the model. Just refer to the answer of that question. That would be the answer. Then there's a question in the book. Of this answer. Audit procedures in case of change in the status of component. Auditor should check that financial statements of parent and subsidiaries are combined as per Ind AS 110. FS of parent and its subsidiaries are combined as per Ind AS 110. On a line-by-line basis by adding together like items of assets, liabilities, income, expenses and cash flow, and this came in exam. According to this point, the auditor should check if FS of parent and its subsidiaries are combined as per Ind AS 110. Then related goodwill capital reserve. NCI is decided as per Ind AS 103. Remember their names. Goodwill capital reserve and non-controlling interest are determined as per Ind AS 103. Then business combination involving entities under common control shall be accounted for according to Ind AS 103. Entities or business under common control should be accounted for as per Ind AS 103. Next, adjustments like elimination of intergroup. Adjustments, unrealized profits, deferred tax are made as per Ind AS 110 as money related adjustments are made through this Ind AS. Associated and joint venture are accounted for using the equity method as prescribed in Ind AS 28, which is investment in associates and joint ventures, and I hope you will remember this point properly. Business combination, which is achieved in stages, shall be measured as per Ind AS 103. So here we are given Ind AS 103, Ind AS 110 and Ind AS 28. Okay. Clear? 110, 103 and 28 are appearing repeatedly. So read this as it came in the exam. Read it properly. It's there in the main book on page number 383 and it's also there as the last answer in the model. The page before the questions, the previous one, you will find it there. If it's not in your book, take screenshot from here and read this answer. Done? Cool. Now after this we will see SA 600, that is using the work of another auditor. We will quickly go over the 4 questions given under another auditor. First question is, how would you accept as an auditor? If only one company's audit is there, you can accept it directly, but if it has subsidiaries, associates or joint ventures, then how to accept? Here we will consider karm. Let's see what this karm means. So principle. Auditor's degree of knowledge regarding the business of components. As the auditor of the holding company, what's the business of its components? I need to see whether the company sells iron, steel, or whether it is an e-commerce. Or if the company sells clothes or has a food delivery app. So all this comes under the knowledge of the business. Then, A stands for the performance of additional procedures as set out in this SA 600 regarding the components, audited by the other auditor. Then next is R, which stands for the risk of material misstatement in the financial information of the components audited by other auditors. Okay. M means the materiality of the portion of the financial information that the principal auditor audits. So we need to check karm here. First is knowledge, means the principal auditor's degree of knowledge regarding the business of the components. Then A for performance of additional processes as set out in SA. Then R for risk of material misstatement of the financial information. M for materiality of portion that the principal auditor audited. Consider these 4 factors for 4-mark answer. 2. Very important. The question of coordination between auditors. Another question comes up about liaison. There should be a proper liaison between the PA and the other auditor. For this purpose, auditor will give written communication to other auditor. W star will be given. W star means written communication, and what will come in the star? The other auditor, knowing that his work would be used by the other auditor, meaning main auditor, what should he do? He should coordinate with the principal auditor regarding the statutory requirements and the timetable for completion of the audit. A for areas requiring special considerations, R for use of his report. Relevant statutory requirements, timetable for completion of audit, then attention to any significant findings and use of his report. And along with that, he has to give a questionnaire while considered necessary by him. PA may require other auditor to answer a detailed questionnaire. So, what happens? The PA will send a questionnaire and the other auditor should respond to such questions on a timely basis. The other auditor needs to respond to such a questionnaire punctually. Then reporting consideration. When PA concludes based on his procedures that work of other auditor cannot be used and PA has not been able to perform sufficient additional procedures, he will make it amar, meaning auditor should modify audit report. To be on safer side, write down a MAR. On a safer side, auditor will make it amar means modify the audit report. If you know what to write, then you can write this too. Write qualification or disclaimer because there is a limitation on the scope of the audit. You can't give a clear if you don't do additional procedure. If you are not allowed to do some things, then qualified. If you are not allowed to do a lot, then disclaimer. In division of responsibility, PA should not be responsible in respect of work entrusted to other auditor unless there are circumstances arousing his suspicions about reliability of the work. Principal auditor should clearly state the division of responsibility by indicating extent to which FS. We studied this earlier in notes. To which financial information of components audited by other auditors have been included in financial information of the entity. By stating number of divisions, branches, subsidiaries or other components, meaning disclose that there are 4 subsidiaries or 2 components, 2 associates or a joint venture. Should be stated in the other matter para as per SA 706. So write it in. Other matter para as per SA 706. There are 4 questions. First is of karm. Then answer with W star, then reporting with Amar and division of responsibility. So this concludes SA 600. Then 2 questions are from TYU and all its questions are very important. It is also there in the book and the model, not the previous ones, but new models with TYU. One is question with the answer of written representation. We have taken it directly and done it. Second question is of other matters answer. Whole story of where and how such information should be included in the report. On the CFS of the company, also draft a suitable para. You need to create a para and also mention the other matter. It's from division of responsibility. You need to do both TYUS and this completes the first group audit chapter. Okay? We've covered questions from the book and notes plus I mentioned the ones from TYU. Quickly recall this from question bank. If you don't have a question bank, you can solve questions from TCI book or model. We revised in half an hour and you'll need another half hour for solving questions. Keeping another half an hour for revision, this chapter can be revised in an hour and a half. 35 minutes with me. 30 minutes for doing questions and 30 to revise completely again, and you can finish whole group audit in 1.5 hours. Cool? We will meet in next class. Bye guys and take care. Aim for a rank of 70 or above, whichever comes first.